Aluminium surges, prices hit a decade high as a coup in Guinea fuels concerns over supply of a key raw material. Plus, we are live at the Munich Auto Show. Don't miss our conversations with the CEOs of VW and BMW, plus many more.
Lots to discuss then when it comes to the mining sector, Tom. I wonder if that's going to be something we'll keep an eye on in the London market and beyond. It certainly was a feature of the session over in Asia that we saw, but also Japanese politics once again to the fore. So you wonder how much of that strength we saw in Asia will be picked up by European equity markets. Well, a little bit of it, perhaps, in terms of the sentiment. Futures do point to the upside. Europe underperformed during Friday's session, underperformed the United States. The US had longer to digest that jobs data. I wonder if we're just factoring in a little bit more thinking on that subject over the weekend, Tom.
Yeah, and I mean, as you were saying as well, futures pointing up. The data coming through from Germany on factory orders looking more positive for the month of July, but supply chains still an issue, and certainly they had an issue here in the UK. The CBI coming out with a tongue lashing for the government here about their efforts, or lack of effort, as the CBI would characterise it, around trying to ensure that there are the workers available to ease some of those supply chains, not just lorries, but other sectors of the economy here. French politics is in focus as well. A poll coming out showing that Macron is essentially neck and neck with Marine Le Pen. So here's the picture as the markets open this Monday morning. The FTSE 100 is gaining a healthy 0.3%. The German DAX is in focus as well on the back of that data, 0.2% for the German markets. Spain is in similar territory, up 25 points, and the CAC 40 gaining close to 0.2% as well. A strong session bleeding through, as Anna was saying, from Japan and China.
Absolutely. So that's some of the drivers. Japan and China were strong during the Asia session. We're without the United States, of course, because it is the Labor Day holiday. But markets just opening up here in Europe. Let's think about what we heard from the US, though, during Friday's session, because it's still something that we're working our way through here in Europe. It was a big miss for Friday's August jobs report. 235,000 payrolls were added in the month, around 500,000 short of the estimate. Here's how some key voices reacted on Bloomberg TV.
This was a materially lower number.
It's a weaker report.
The first read is definitely this has some Delta variant on it.
This is the long game right now coming out of a worldwide pandemic.
There's one huge red flag for me in this payrolls report.
The hospitality number and the restaurant number.
0 jobs were created in leisure hospitality.
We had almost zero gain this month in that area.
You'll get some bounce back here in September.
The market's looking through this and seeing, hey, this is temporary.
Tapering is still very much on the table.
The Fed is going to taper.
The market is now pushing back any sort of Fed taper announcement to November, maybe December.
They don't need to rush into it. And the most important thing not to lose sight of here is the emphasis that tapering is not tightening.
Okay, we're joined now by Martin Malone, Chief Economic Advisor at Alphabet. Martin, good morning. What are the key takeaways for you from this disappointing jobs data, or at least the miss versus the forecasts?
Yeah, actually, we're not disappointed about it at all, really. It's a Delta issue to a large extent. And we're very optimistic about the jobs market simply because of the output gap. And we see the U6 wider unemployment measure actually outperform the U3 measure. And that's our key issue for predicting the output gap going forward. We've had a very, very significant narrowing of the output gap on the back of Friday's report. But much more importantly is what's happening today, and that is, even though it's Labor Day, 10 million people will fall out of the labour market subsidies in the US. So the September report, which we won't get until early October, That's really going to be the most important signal for Fed policy and tapering for the rest of the year.
Good morning to you, Martin. Yeah, talk to us a little more about the different measures of unemployment then and what that tells us about the structure of the market, how much dysfunction there is maybe in the US market, or the extent to which it's not functioning in the way it did pre-pandemic.
Well, we lost 20 million jobs last year, and then it rapidly rebounded by around 15 or 16 million. So we're still tracking significantly below pre-pandemic levels. And the whole focus of America, as in Europe and in Asia, whether it's China, Japan, or the UK, is to get jobs back as fast as possible. And that's the most important thing here, is allowing all of the subsidies. It's almost like Big Bang today in America. All subsidies across all states will end. At least 7 million now will have no subsidies from tomorrow. And a significant number of the economists within the White House are very, very worried about that. And we will get the first outlook of that with the September payrolls report in early October. And that could be much worse than what we saw on Friday.
Okay, Martin, just focus and keeping the focus on the wages and the labour market. Wages more than doubling above forecasts, at least, out of these non-farm payrolls. You've got that combined with the fact that the economic data suggests that recovery is peaking, not just in the US, but globally. And, of course, the tools for the Fed are limited as it looks to a taper. Is there a risk here of stagflation?
There is, and we actually are in the middle of it right now, because the inflation levels this quarter are tracking at 5%. And the GDP report for Q3 could be closer to 3%. So we already have significant stagnation in Q3. And as we see in the vaccines in the US, they've almost stalled. For the last 3 months, they're at 75 million, which sounds like a huge number, but Europe has done 280 million, and Asia has done 2.3 billion. So we're seeing a tick up slightly in vaccines, and this is very, very different across America. The southern states is where we're seeing vaccine take up at very low levels, whereas northern states we've seen a very significant take up. So that's also very, very troublesome, and we're going to have to see some more action on vaccines in America to get a little bit more bullish for Q4.
To try and push up that vaccination rate. Martin, so stagnation is a possibility, or perhaps we're in it at the moment, as you point out. Meanwhile, US stocks hit new records, the NASDAQ touching a new record just on Friday's session. For as long as we have interest rates as low as they are, does this continue?
Yeah, so this is the dilemma here. So we talk about all of this negative economic information, and we've got negative political information as well, because some of the Democrat senators are not going to play along with the Build Back Better $3.5 trillion fiscal package. There's huge pushback coming on that. So this could derail the Democrats' fiscal policies with votes to be taken in September and October in Congress. That, again, will also be troublesome. But overall, the policy mix is extremely supportive. And we must remember that the most important companies in America, a large amount of their business is not just in the United States. So if we take the tech sector, more than 60% of their revenues are outside of America. So we really have to look at the European space and the Asia space when we look at the US stock market as well. It's not a domestic stock market.
Martin, thanks very much. Stay with us. Martin Malone from Alpha Book with us this morning, this Monday morning on the European Market Open. He referenced politics then. We'll be back to that theme shortly. Coming up, Germany's election is looming on the horizon, and environmental issues have been a key battleground for the parties. We'll get an update from Germany on that particular fight, that particular part of the political story in Germany as we build towards the elections. This is Bloomberg.
after 15, 16 years in power, actually, remains one of the most popular, if not the most popular, German politician ever. Who's the right person to fill those shoes?
Well, whoever is going to be filling those shoes is going to have a very hard time. Look, as the Merkel era ends, most of the certainties which we Germans, during 16 years of Merkel, tended to take as forever, are evaporating before our eyes. The eternal assurance of the United States always protecting us, that's gone out with Donald Trump. The certainty that we will build an ever closer union, the EU, has gone out of the window with Brexit.
Happening on the ground right now, just in terms of consumer price tolerance?
We see a strong consumer right now, and you can see that even in the early starts to back to school and back to college season that we're really pleased with. And I think if we step back and look at the quarter, you know, we see the evidence of that strong consumer.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Welcome back to the Open. We are just over 10 minutes into the European trading day, broadly positive across the markets here in Europe after a strong session in Japan, mainland China and Hong Kong.
Let's have a look at some of the stocks on the move then. That's the broad picture Tom's just taken us through. Moving to the upside, some Asia influence perhaps. We're also without the United States today because it is Labour Day. But we do have some individual movers that are of interest. Dechra Pharmaceuticals, this London-listed specialist in pharmaceuticals for the veterinary side of things. And they actually met estimates, but they've been cut by some brokers. The stock down by 6% this morning. And the read across from tech in Asia, pretty strong at Prosus then, Tom.
Yes, the Dutch internet services provider, which of course has a stake in Tencent. Tencent is seeing a gain of more than 3% today, possibly on the back of a view that maybe things have bottomed in terms of the regulatory front. So you're seeing a gain there of 2.6%. Nomura coming out and saying that maybe we're looking at a circuit breaker for Chinese tech. We're also seeing a rating, a cut from an analyst, this time over at Nordea, having an impact on EQT. So EQT, the private equity business, that stock down by 3.8% or so. This after Zooplus confirmed it was in talks with the financial investor EQT regarding a potential voluntary public takeover offer. So that's weighing on the business, as is, I say, the sell recommendation from Nordea, Tom. Okay, so those are some of the individual stock stories. Let's switch focus to politics out of Germany. It's less than 3 weeks until Germany's election, and environmental issues have been a key battleground for the parties, not just the Green Party, with a heavy reliance on coal for electricity generation and a thriving industrial sector. The country is Europe's biggest polluter. But can Germany cut its carbon footprint without denting jobs and economic growth? Let's get more then with Bloomberg's Maria Tadeo, who is in Berlin. Maria, how far is this election then being fought on the issue of climate change? How central is this?
Well, Tom, it's a huge topic going into this election. If you look at polls, almost 40% of Germans will tell you that for them, the next big priority for the next government should be taking on climate action. That is a huge number for a single issue. Of course, there's a number of reasons as to why this is happening. You do have a huge generational change. You do see a lot of Germans who tell you this is what they care about. It's the future and going greener. Of course, you also have the huge European legislation to implement that Green Deal that the European Commission is really focused on. And then, of course, as you alluded to, it's the German industry. They say we need very clear guidance to be able to compete and stay competitive in terms of the future models of cars that we need to make. So it's all of this that makes this such a central issue. Now, when you look at the big parties running in the election, both the CDU, the SPD, but also the Greens, they agree that they need to hit climate neutrality, but they do disagree and differ in terms of the policy measures that they want to take on, and especially especially the timeline going forward.
And Maria, how do the parties' targets differ then when it comes to the climate agenda?
So, Anna, when you look at their different manifestos, the SPD and the CDU, which are still currently in government and competing to win the election, they very much aligned in terms of the targets and the timeline. Both say that by 2045, Germany will need to be climate neutral as an economy. This is 5 years before the European deadline. Remember, that is 2050 for the EU 27 as a whole. They also say that they need to cut down emissions by 88% by 2040. So they are aligned on that. When you look at the Greens, however, it's a much more ambitious target. You know, they say they want to get to climate neutrality in the next 20 years, cut down emissions majorly. They also say the German industry really needs to remove diesel cars and take them off the road. And a key factor for them in their manifesto is that when you look at net investment to modernize and turn this economy greener, they say that should be exempt from the debt rule. So again, it's very much about the amount of money that will be put into work, the regulation, and also the timeline, the targets in terms of the future timeline going forward to hit those goals.
Maria, thanks very much. Thanks to Bloomberg's Maria Tadeo there in Berlin. And sticking with the politics, it is not just Germany where we're seeing movements on the political landscape. The leaders of Canada and France are fighting a slump in the polls. The weekend saw a military coup in Guinea, of course, and Japan's Prime Minister Yoshihide Suga quit over discontent at the government's COVID response, leaving aside the activity in Guinea and what that's doing on the commodities space, thinking about some of the larger economies and where we're seeing political change. Martin Malone from Alpha Book is still with us. Martin, do you think we're going to see then a focus on fiscal policy? That seems to be the message coming out of Japan, that you know, one man steps to the side and everybody starts to question whether we'll see further fiscal stimulus coming through. Is that going to be the theme of the autumn, the theme of the fall?
Yes, I think you're spot on, and I think basically we have to sort of contrast this. We have currently a political pandemic going on, so we've sort of progressed from the COVID into the political space, and we're potentially going to have new political leaders in 3 of the G7 this month in Germany, Canada and Japan. And we also see the net approvals in US and UK of their leaders have actually imploded. And so this is a huge pressure for all political leaders. What do you do post-pandemic? What do you do post-war on terror? What do you do for net zero? So this is basically the background, and the main issue is we have monetary policy settings near the lower bound. We have central bank balance sheets at record levels, and this basically holds the entire fiscal policy has to do all of the heavy lifting over the next number of years. So all climate-related policies will be fiscally related, not monetarily related, and all political leaders will be under significant pressure to deliver action and positive action on fiscal. Very, very different than the situation after the 2008 crisis.
Martin, how do they navigate the need for additional fiscal support that you've outlined there with these inflationary pressures? We're seeing it feed through now with aluminium on the back of this coup in Guinea, which I know you've been looking at, and the gas prices in Europe as well. The reluctance by Moscow, the Russians, to increase that production or that shipment of gas from Russia to Europe. How does all of that feed into the decision-making in Brussels?
Well, I think it's a circle that has to be squared, and there's virtually, with all of these leadership changes, the direction on all of these questions is going to be very different than what we expect. And some of the key people now where there's actually some political stability will relate to Mario Draghi in Rome. So his power base is going to not just be an Italian decision-making process, but it'll also be in Brussels. And we assume that Olaf Scholz will be the new chancellor with a coalition with the Greens and the FDP. And, you know, he will not be, he will significantly change the historic German fiscal policy to a new regime. And it'll make it much easier to make those decisions when you've got fiscal tailwinds. And that's exactly what Scholz and Draghi will push quite aggressively, not just in their own countries, but across the European Union.
And if we're going to see fiscal tailwinds to the fore then, Martin, as we go into the last few months of this year, what will that do to the euro? There's been a little upward pressure on the euro given the slight resurgence in inflation and all the talk of taper at the ECB. We have the ECB later this week, of course. But generally, it's a fairly stable currency relative to many. So what are you anticipating that we'll see there?
Yeah, we're actually relatively positive, the euro, because of some of the things you mentioned. And the euro has to sort of take away some of the easing, because if we have significant monetary easing for another 18, 24 months, significant fiscal easing, something has to tighten up, and that will come through the currency angle. And I think the currency has already done well in the last 2 weeks and can move up above the 120 type levels.
Martin Malone, great insights as ever. Thank you very much indeed. Chief Economic Advisor at Alpha Book, joining us this Monday morning. Let's check in on some of the miners then on the back of this aluminium story. Of course, bauxite is sent and shipped from Guinea, where there's been a coup. In fact, Guinea provides more than half of the imports into China of bauxite for the production of aluminium. Now, this is playing into the European space as well. You can see that reflected in the stock prices of Nordhydro and, of course, Rusal, which has a listing in Hong Kong. The Hong Kong listing of Rusal, by the way, gaining more than 12%. Again, on the back of more than decade highs when it comes to the aluminium price. Okay, coming up, auto shows are back. Munich will be Europe's first major car show in 2 years, but a COVID resurgence threatens the big deals some car makers are hoping for. More on that next. This is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
There is wide disagreement on whether we've seen the worst of the Delta variant in terms of the upsurge in cases. Where do you fall on that?
So I see that the curve is continuing to go up, which is worrying. What is making me really nervous today is that there is this accompanying surge in deaths as well.
Welcome back to the European Market Open. 22 minutes into our European trading session, making decent gains across European equity markets this morning. Now, auto shows are back. Munich will be Europe's first major car showcase in some 2 years, a chance for automakers to show off their fruits of their labor. However, car makers like Audi will be sending smaller teams, and the show is overshadowed perhaps by concerns that major deal opportunities could be cancelled amid a COVID resurgence. Joining us now is Bloomberg's Matt Miller. He was not put off. He has been hot-footing it in high anticipation of this Munich Auto Show. Matt, good morning to you. So we heard your interview with VW earlier on. Mobility as a service, just one of the talking points over there.
Yeah, the talking points are definitely going to be around mobility. So you're going to hear a lot of announcements on, for example, revenue expectations from mobility. We're now hearing forecasts that major automakers expect substantial 15, 20, 25% of their revenue contributions in the next decade from mobility, rather than just the old school core business of building cars and selling them. But I have to say, the thing that we're going to be talking about the most at this show is supply chains. How many chips can you get? How will you allocate your chips to the different brands that you have? You know, Volkswagen has, I think, 10 or 12 brands. So all of those brand heads are fighting for the attention of Herbert Diess and saying, please give us the chips that you have. And that's happening at every company. So the thing that's going to come up over and over again is jostling for batteries, jostling for the minerals that go into them, or jostling for chips. It's going to be all about the supply chain kind of under the hood here in Munich.
Yeah, interesting, that internal competition for those suppliers within those businesses, as well as the competition between businesses. What is that in terms of autonomous driving, Matt? What are the developments there? To what extent is the semiconductor shortage playing into that?
You know, it's not as much playing into autonomous driving because there aren't as many cars that are able to do that quite yet. And what Diess was telling me from Volkswagen is that they still need to ramp up production of those specialized vehicles. Demand isn't an issue on that side yet, or at least they don't want demand to jump up too quickly. And also, they don't expect the autonomous piece to make up so much of the mobility. Maybe 15%, 1.5, will be like robo-taxis, or the kind of cars that you just get into, they take you to a place, and then you get out and you don't own the car. So that's not going to be a huge portion of it. The chip shortage is really going to affect the EV space, and also still the legacy internal combustion engines that they're making for sale. They expected the chip shortage to be over at the end of the summer, and now they're seeing another dip in terms of supply difficulty. And Diess was saying it's going to be months, it's going to be possibly years until they get to the end of these bottleneck issues.
Yeah, possibly years. It's quite something, isn't it? Matt Miller on the ground for us at the Auto Show in Munich. We'll have plenty more from Matt throughout the day, of course. Okay, coming up, we're going to keep it on cars. We hear from the CEO of BMW. We're going to bring you our conversation with Oliver Zipser on the EV market. That is next. Just bringing you to the attention. In terms of the aluminium prices, that, of course, is a factor for EVs. Rusal, listed in Hong Kong, shares above 12% now on the back of those price pressures filtering through to that metal following the coup in Guinea. Bauxite is produced in that country, and that is used in the process of aluminium. Plenty more ahead, including the checking in on the sectors and the broader European markets. This is Bloomberg.
接会場に行って観戦するということも難しいお子さんがいるんです。このように冷房の効いた香港の体育館の中で、それこそ大会の最前列で観戦ができる、体験ができる、こういうことをとてもありがたいことだなというふうに思っていますし、この技術に感動しています。予想以上に子どもたちの反応が良かったというのはですね、とても校長として嬉しく感じております。この子どもたち、どれだけオリンピックの心待ちにしていたのかっていったことがよくわかるような今日の表情です。
Right now, about half of U.S. households invest. We'd like to get that number up to 95+%. Investing should be as ubiquitous as shopping online. It should just be something that people do.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Welcome back to the European Market Open. 30 minutes into our European trading day this Monday. Here are your top stories. Disappointing jobs numbers. The smallest increase in 7 months adds to uncertainty over the Fed's taper timeline. The US is closed for Labor Day. Aluminum surge. Prices hit a decade high as a coup in Guinea fuels concerns over supply of a key raw material. Plus, we're live at the Munich Auto Show. Don't miss our conversations with the CEOs of VW and BMW, plus many more. Tom, European equity markets getting quite a boost this morning, actually. A real positive handover from the Asia session, from Japan, from China, helping to lift nearly all sectors, in particular the tech sector here in Europe.
Yeah, we've been speaking to the analysts, the investors this morning, suggesting that maybe the read-through from that jobs number isn't so negative. You look at the wage growth and you look at how the structures around employment are changing. The wage growth coming in more than double the estimates. Tim Graff from State Street saying that for him is a positive. But absolutely, these markets in Europe are taking their cue from the positivity that we saw in Japan, still above 30-year highs there, and optimism as well in China that maybe some of the regulatory challenges, despite this renewed focus on the financial sector, is starting to play through now. The Stoxx Europe 600 gaining 0.5%. Here in the UK, you have the CBI coming out and giving the government a tongue lashing once again on supply chains. The FTSE 100, though, benefiting from some strength in the miners, 0.5%. The DAX is gaining 100 points, 0.6%. And the CAC 40 as well, also solidly in positive territory. Just marking as well some German data that we had out for July, suggesting that the factory production picture is looking a little bit more positive. It certainly was in July. Let's switch it on to the sectors then and see how things are breaking down this Monday morning as we are 30 minutes into the session here in Europe. Technology, top of the pile, gains of more than 1%. At the bottom, just one sector is in the red. That is real estate, down at 0.3%. Some very good news out of Germany is the fact that we are on the ground at the auto show in Munich. Matt Millett is there covering everything for us. And BMW has boosted orders for battery cells to keep up with increased demand for electric vehicles that made up for more than 11% of deliveries during the half of the year. We spoke with the BMW CEO, Oliver Zipse, on the EV market and the challenges in meeting this demand.
Just this year, we ramped up our contracts which we have with our supply chains from 12 billion euros up to over 20 million euros. So we are ramping up there, and we always said battery technology, the electric drivetrains, is not an easy thing to handle. But we are now in our 10th year of developing these, and we are very confident that we can ramp up this market demand as quickly as possible.
Okay. What about this 6th generation around 2025? What kind of improvements can customers expect then?
Right. The 6th generation will come with our Neue Klasse, with our new full electric, BEV-only architecture. And I think the main thing is to extend the range, to increase the energy density and at the same time reduce cost. That is the target for the sixth generation.
You're really focused on reusing materials for making new cars, but in the short to medium term, where are your key worries on raw material inputs for batteries? Where do you think we might see the biggest bottlenecks?
Right. You know, circularity is not only an ecological argument, it's also an economical argument. What we see this year, the increase in raw material prices are on the rise for various reasons, but it is an economic reality. So I think for ecological reasons, but also as a business model, I think we have to put circularity more and more into the focus, and the Neue Klasse is all designed around that principle.
But which raw materials are you worried about right now?
Well, currently it's steel is getting more expensive. We have palladium, we have rhodium, we have lithium, who get more expensive. Normal copper is getting more expensive. So it's a wide range. It's not one single raw material we look at. We look at all kinds of raw materials, and I think it's good advice to take that more serious.
Okay, and I mean, if we're sticking with supply issues, I have to ask you about semiconductors, of course. In August, you said that the second half is going to be significantly more difficult. And since then, we just had more bad news in terms of the supply. Right. What are you bracing for right now during the second half?
You know, our take is the first half year we were able to largely compensate for our customers the effects. And as I said some weeks ago, the second half is more difficult, and that is what we see now. It is more difficult. It's here to stay, the problem, for many months. But we are intensively working with our suppliers to compensate the effects for our customers.
That was Elizabeth Behrman speaking with Oliver Zipser, BMW's CEO. Really interesting there about circularity and how it's not just an ecological, but also an economic development. Let's get a Bloomberg First Word News update. Top stories we're tracking here at Bloomberg. Here's Laura Wright.
Thanks, Anna. The Taliban say they have captured a province in the north of the country, the last pocket of resistance standing in the way of complete control over Afghanistan. A spokesman for the group said rebel fighters had fled the province. The Taliban are expected to announce details of their new government soon. Aluminium has hit a 10-year high after a unit of Guinea's military seized power and suspended the constitution. The West African nation is a key source of bauxite, which is used to make aluminium. The head of Guinea's special forces announced the takeover on state television and urged the armed forces to back him. The colonel accused President Alpha Condé of financial mismanagement and corruption. The UK's biggest business lobby has criticised the government over labour shortages, warning they could last as long as 2 years. CBI Director General Tony Danker says a perfect storm of Brexit, cutting the supply of workers from the EU, and the pandemic have left many sectors without the staff they need. The CBI wants targeted immigration to fill job gaps. The top White House medical advisor says Pfizer and BioNTech's vaccine is the only one likely to be approved for US booster shots against COVID-19 initially, while the Moderna shot may be delayed. Dr. Anthony Fauci's comments to CBS may provide more clarity on the administration's stance. The White House has faced criticism of political interference in the review process. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Tom, Anna.
Laura, thank you very much indeed. Okay, coming up, hydrogen is becoming an increasingly popular option for combating climate change. We're going to talk to the co-founder of an investment fund that will focus on the sector. This is Bloomberg.
Can come together to help less developed, fragile, vulnerable countries with adaptation and resilience, and we can do what we developed world need to do to reduce the damage being done by our practices of the way we produce energy.
But how likely is it that we keep that 1.5 degrees within reach?
Well, look, the Paris Agreement said well below 2 degrees. That's what everybody signed on to. What is well below? It's certainly not 1.9 or 1.8. It's somewhere close to the 1.5 degrees. And so I think it's very important to do it because every decimal point of rise in temperature it is remarkably compounded in the damage that it does. We're at 1.2 degrees today, and you see what's happening. Imagine what happens when you're at 3 degrees or so, which is the track that we are currently on.
The growth story in cannabis remains very strong, even after the sort of loosening of the pandemic. There was a worry that there might be wallet spend competition, but so far the cannabis sector seems to be holding up very strong.
Welcome back to the European market open. Just 40 minutes into our European trading day. The US is closed, of course, for US Labor Day. So bear that in mind in terms of volumes that we might see or not see in the afternoon here in Europe. But for the moment, European equity markets moving to the upside, lifted perhaps by better sentiment coming out of the Asia session. Now, Joe Bamford, a member of the family behind one of the world's largest construction equipment makers, has co-founded an investment fund to focus on the hydrogen sector. HYCAP, HyCap, has raised more than £200 million as it aims to boost the production and supply of hydrogen made from renewable energy. The move comes as hydrogen becomes an increasingly popular option for combating climate change. Joining us now is Joe Bamford, founder of hydrogen energy producer Rise Hydrogen and owner of the Northern Ireland-based bus company Wrightbus, and behind this fund. Thanks very much for coming to talk to us, Joe. So let me ask you what your expectations are for the investment opportunity. How big is the investment opportunity in hydrogen?
Well, hydrogen is just starting, but it's a very large part of the world economy going forward. Hydrogen you can use in all sorts of things, not only from transport, but also to decarbonising things like steel, cement, and even hydrogen for heating. But you have to start with transport because that's where the cost base is today. And our job and our hope with this fund is we're going to invest 75% of it in the UK to drive the hydrogen economy in the UK and bring parts of the hydrogen value chain that we don't have here to the UK and get the volume up and reduce the cost base of it all.
Okay, Joe, let's kind of unpick that a little bit more then. So 75% of the focus domestically. What exactly are you targeting? Is transport front and centre for you to build out that supply chain?
Transport is the starting place. So in transport, you've got to make hydrogen at £6.50 a kilo. That's the equivalent price to running it on-road tax diesel. And we think we can do that today. We're building hydrogen production facilities in the UK today. And so we start with transport and then we do the bigger and heavier stuff in the hydrogen economy.
Okay, so transport is the focus for you. In terms of the businesses that this fund is going to invest in then, where in the supply chain, Joe, do you see most of the investment opportunities? Is it in production, in distribution, in storage? Where along that supply chain will you focus?
Actually, it's a whole lot. So the most difficult thing with hydrogen is marrying up supply and demand. So anywhere between 20 and 40% of the fund will be in production of hydrogen, particularly green hydrogen, which is turning water with renewable energy into hydrogen. And then the other parts of the fund will be looking at bits that aren't kind of there today. So things like hydrogen filling stations. Hopefully we'll manufacture or invest in businesses manufacturing hydrogen filling stations. And then ultimately the other end is buses. If we do a bus, we can do a truck, we can do a van, we can do other parts of that economy. So actually, if you're looking at hydrogen and you're looking to invest in the world of hydrogen and you invest in us, you get to look at the whole value chain and decide where you want to co-invest across that value chain. And the interesting bit about it is the government have planned to put in 10 gigawatts of production over the next 10 years. Our fund aims to do at least a gigawatt of that over the next 10 years and help the British economy move towards its net zero.
Joe, you touched on the government's response there. What more could they be doing? Are they doing enough at this point?
Well, I think the government are doing what they can do. They're putting a £240 million into the world of hydrogen. And
that doesn't sound like very much, though, Joe, from the UK government. It sounds like a drop in the ocean.
I think the government are trying hard. I mean, admittedly, we're probably the same size as the government. Hopefully we'll end up having more money to invest in the economy than them. Germany are going to spend 9 billion on this, and the European government are going to spend £500 billion over the next 10 years embedding hydrogen in their economy. And I think we need to do the same in the UK. The government have announced a lot of plans to do hydrogen, and it needs people like us to come along and say, do you know what, we will invest alongside you. We do need to have a few of the subsidy regimes a bit more defined, which enables our investments to be better made. But in essence, we can start get going today and really push towards getting to net zero in the economy.
Your fund has raised £200 million, Joe. You want to invest in hydrogen. Who are the investors? Who are the people who put money into the fund, or the types of investors that want to get exposure to hydrogen energy at this point?
Well, in essence, we as a family have put some money in, but, the investors are more pension funds, some family offices, and also some people in the hydrogen value chain who realise that they need to tie up with other parts of that value chain to make it work. So, if you're an oil and gas company and you make oil and gas, but you actually haven't got a customer for it, invest in this fund because we've got a customer for it. Or if you are a truck manufacturer making hydrogen trucks but don't have hydrogen production, invest in this, which is kind of interesting. On the other side of it, if you're a pension fund who wants to have exposure to the world of hydrogen but don't quite know where to invest, put your money into this, and you can then decide across that value chain what returns you want and how to look at it and where to co-invest. Because the most difficult thing about hydrogen is really kind of understanding and how does it marry up and how does it not marry up.
We've had a lot of focus, and there has been over the last few months, on input prices, inflationary pressures. I'm wondering if you're seeing that feed through into your bus business, Joe.
Yes, I mean, there are inflationary pressures out there in the market. Clearly, you are looking at a global market. I mean, luckily, we're in Northern Ireland, and Northern Ireland people don't move as much, so we actually do have employment coming back in. We've just announced another 300 jobs. We took over the bus business 2 years ago. It was bankrupt. We brought it out of bankruptcy. We had 45 employees. We've now got about 1,000. I'm pleased to say in our first year out of bankruptcy, we made a profit, even though we had to turn the factory on and off twice during COVID. It was a lot of hard work, but it's been a wonderful place to be invested.
Can I ask you, on that subject, sticking with the UK economy, you say that, and a lot of your business interests are UK focused. The CBI has been pretty critical of the government overnight, talking about how maybe they should be doing more to free up the labour market, or to maybe even allow foreign workers back in because of difficulties in finding enough people to drive heavy goods vehicles and the like. What's your experience of hiring at this point?
Well, look, where we are in Northern Ireland, we aren't having a huge amount of problem on hiring. The lovely thing about manufacturing is mostly it's based in sort of secondary or tertiary towns around the country. It's not based in the southeast. And actually, normally we're the main employer in those towns. And so actually, we normally get people coming back to us quite well. There is a bit of difficulty in getting people, but we find also by having good apprenticeship schemes. And in the family business in JCB, we also run our own high school as well. So we actually see people through quite a lot of their lives, and they don't move a lot from our area because, we try and give back to our communities as well.
Okay, Joe Bamford, thank you for joining us on the prospects, the opportunities around hydrogen, of course, giving us his views as well on some of those labour constraints here in the UK. Founder of hydrogen energy producer Rise Hydrogen and owner of Northern Ireland-based bus company Wright Bus. Okay, let's get the Bloomberg Business Flash now with Laura Wright. Laura.
Thanks, Tom. Goldman's Peters Hill unit, which specializes in buying stakes in alternative asset managers, is to list a new investment vehicle that holds stakes in companies with $187 billion in assets. Peters Hill will place minority stakes in 19 private equity and other alternative managers into a structure that will then list in an IPO in London. Sources say the entity, to be called Peters Hill Partners, could be worth more than $5 billion. The London Metal Exchange will reopen its iconic Ring open outcry trading floor today after closing it 18 months ago due to the pandemic. The Ring is the last spot in Europe where traders still set benchmark prices by shouting orders at one another, but many fear that volumes will be sharply lower than before the closure, possibly making the Ring's continued operation uneconomical. Deliveries of Boeing 787 Dreamliner are expected to be delayed until at least late October. That's according to the Wall Street Journal. The report says the FAA rejected Boeing's latest inspection proposal. Boeing halted Dreamliner deliveries in May while regulators reviewed its plans. The first Marvel film featuring an Asian superhero, Shang-Chi and the Legend of Ten Rings, dominated the US weekend box office with an all-time record for a film opening over Labor Day. The Disney movie made an estimated $71 million in US and Canadian theaters, blowing past initial estimates of $52 million. That's the Bloomberg Business Flash. Tom, Anna.
Laura, thanks very much. Laura Wright here in London. Now, coming up on this programme, aluminium climbs to the highest in more than a decade as political unrest in Guinea fuels concerns over supply of the raw material needed to make the metal. We get the latest on the markets, but the Markets Live team will also touch on other themes driving assets this morning. That's next. This is Bloomberg.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
We are working on a very large market, and that gigantic market, there is a niche, which is the super high performance cars, and the Motor Valley is a clear example. There is, of course, at the moment a discussion ongoing with the Commission, but this is relatively marginal. I think the very important point is that those cars, they need very special technology and they need batteries for the transition. So clearly, one important step is that Italy gets sort of autonomous in producing high-performance batteries for automotive applications.
Roberto Cingolani, Italy's Minister for Ecological Transition, on the country's attempt to shield supercars, Italian supercars, from the EU's planned phase-out of combustion engine vehicles by 2035, something I'm sure Matt Miller would be interested in talking to you about if you contacted him via Instant Messenger. Now, let's have a look at where we are on these European equity markets, 53 minutes into our trading day, and we have European equity markets making decent gains, actually, being lifted perhaps by better sentiment coming through from Asian markets. There we go, up by 0.6% on the Stocks Europe 600. Heather Burke joins us from our Markets Live team. Heather, a host of factors, good morning, a host of factors pushing markets higher, some of those coming through from Asia. But we also have the alumina story, of course, and the military takeover in Guinea and West Africa, pushing up the price of bauxite and then aluminium. So this is also lifting the share prices of those companies that sell this metal.
Right, good morning. So Guinea is the biggest exporter of bauxite, which is a big raw material used for aluminum. And today, the political unrest in Guinea is sending those prices to the highest in a decade. And this also comes as you've had China cutting back on aluminum production to reduce emissions and because of electricity issues. So this is, and you've also had rising metal prices across the board. So this kind of adds to that uncertainty.
Heather, how should we expect markets to readjust to this changed taper time frame and what it may mean for the dot plots?
Right now, Friday's job report was kind of disappointing to everyone. You had lower than expected job growth, but also wages were higher than expected. And the sense that's coming out is that the Fed probably won't announce a tapering in September. Maybe that'll get pushed back into November. So in essence, that will also probably push the dot plots back in, a year or so, depending what comes out in terms of the taper. And remember that the Fed has made it very clear that tapering is not going to be the same as rate hikes.
In focus over in Germany, all things auto, of course, the Munich Auto Show taking place, Heather, but also we have a reshuffle or an expansion of the DAX, the Xetra DAX, that is in train. What are we learning about the new makeup of this German blue chip index?
Right. So the DAX is expanding to 40 members from 30, the German benchmark. And you saw quite a few growth companies added. Zalando, which is an online clothing retailer, and also Just Eat, food takeaway, Puma, which makes apparel and sneakers. And that could add to the growth appeal of the DAX. The DAX is really a cyclical index. It has a lot of autos and industrials, and it's been hit by some of the concerns about a slowing economy and supply chain issues. And adding some of those could make it more attractive to global investors.
Heather Burke from the MLive team on the restructuring of the DAX. Also, of course, the impact of that much lower than expected jobs number we've got out on Friday. Thank you very much indeed. Just checking in on the European markets before we let you go over the end of this hour, at least 0.5% gain is what you're seeing across the benchmark. Gains here in the UK, France, Germany, Spain, Italy as well. The euro dollar is currently 1.18. The dollar is a little stronger in today's session. Looking ahead to the ECB at the end of this week as well. Also pointing out we have some German data around the factory space as well. Inflation remains, of course, a key question for those ECB governors. That is it for the European market. Open Surveillance Early Edition is up next. This is Bloomberg.
do you predict the Taliban will do in the coming months and years?
I would say consolidation of their power and gaining international legitimacy and recognition. This is the priority for the Taliban, not supporting transnational jihad, not basically in any activities outside of Afghanistan. If you really watch carefully what the Taliban have done in the past few days, they are engaged in a public relations offensive. They are trying to convince the world. If you listen carefully to what they're saying, you think that the Taliban are newly born Democrats. They are peacemakers. And the reason why they want to consolidate their power, they want to convince the world that the Taliban have changed.
Lots happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
I support the new framework.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
There is a spike in inflation right now this year, and we have to avoid that it becomes structural.
There is a need to invest more in semiconductors so that we can get rid of this dependency.
The second half is more difficult, and that is what we see now. It is more difficult. It's here to stay, the problem, for many months.
This is Bloomberg Surveillance, early edition with Francine Lacqua.
Well, good morning and welcome to Bloomberg Surveillance Early Edition on this Monday, the 6th of September. I'm Francine Lacqua here in London, and here's what's coming up on today's program. Disappointing jobs numbers. Well, the smallest increase in 7 months adds to uncertainty over the Fed's taper timeline. The U.S. is, of course, closed for Labor Day. Aluminium surge prices hit a decade high as a coup in Guinea fuels concern over supply of a key raw material. Plus, we're live at the Munich Auto Show. Don't miss our conversations with the chief executive of VW and BMW, plus many, many more. Now let's get straight to the markets. European stocks actually gaining this morning along U.S. futures. Of course, investors now betting that a slower hiring in the U.S. may delay tapering. That's after a very disappointing jobs report on Friday. 235,000 payrolls were actually added in the month, around 500,000 short of estimates. Now, you can see a little bit of pressure on the stocks European 600. I mean, not pressure, but it's not gaining by that much, 0.5%. Just a reminder, cash treasuries are closed today, as is most of the U.S. in terms of volumes. We're expecting a pretty thin volume trading session. Here are some guests reacting to that jobs report.
This was a materially lower number.
It's a weaker report.
The first read is definitely this has some Delta variant on it.
This is the long game right now coming out of a worldwide pandemic.
There's one huge red flag for me in this payrolls report.
The hospitality number and the restaurant number.
0 jobs were created in leisure hospitality.
We had almost 0 gain this month in that area.
You'll get some bounce back here in September.
The market's looking through this and seeing, hey, this is temporary.
Tapering is still very much on the table.
The Fed is going to taper.
The market is now pushing back any sort of Fed taper announcement to November, maybe December.
They don't need to rush into it. And the most important thing not to lose sight of here is the emphasis that tapering is not tightening.
Well, joining us now to talk about that jobs report, the Fed and inflation, is our Eddie van der Walt of Bloomberg Markets Live. Eddie, I enjoyed talking to you about inflation in between also our chats on pets. I mean, the market's reaction to that huge miss from NFP was pretty bland.
So it was a really mixed report, wasn't it? Because, I mean, on the one hand, yes, jobs growth was really slow. But on the other hand, you know, you had that boost to inflation from average hourly earnings, which is just really hard for the market to interpret. And frankly, for the first just hour after the report came out, the market didn't know what to make of it, right? We had stocks up, we had stocks down. Good news was going to be bad news, and then people thought, well, listen, this bad is so bad that it's actually bad. I think it's going to take, even now, I think people are struggling to interpret it, and I think we are going to wait for Fed speakers to come in and start to tell us what to make of it.
Right. I mean, what do you make of it? Is it, it can't be only seasonality, but actually the fact that it was the end of August, does it, contribute to some of the volatility that we could have seen?
I think some of that. I also think that, I think that if the job growth was slow because there's a lack of openings, I'd be very worried. But openings are very high. I think what's going on is companies are struggling to fill positions. I think that's what's happening here, and I think for that reason, it's more inflationary than people think, and it's probably a more optimistic view of the economy overall. I think there are people who are holding out for the right kind of positions, but there is friction in the job market, with high unemployment and high openings, and that is a conundrum that the market is struggling to interpret.
And could it be actually a huge shift on how we look at the labor market? So if it's struggling to fill in positions, does the structural basis, I don't know whether it's pandemic and so people want to work from home, so you don't go after, does it actually point to a changing labor market that could confuse the Fed?
Right, I think so, and I think I don't know that those structural issues are going to be short term either, because a lot of people got furloughed, lost jobs for other reasons, and I think and the kinds of jobs they see opening up as delivery drivers, as these sorts of things, and now in restaurants as those reopen, it might not be the kind of jobs that they are looking for, and I think people might. As long as we keep stimulus going, people might be happy to not take the first opportunity that comes up. So I think these are going to be difficult issues to solve.
So Eddie, we have a pretty big week actually ahead of us. I mean, today, so the U.S. markets are closed, so we're going to get probably thin volumes, not much going on in treasuries. We could hear from President Biden about whether he reconfirms Jay Powell or not. We have a Reserve Bank of Australia meeting, I think, this week. We have some China trade data. What's your next data point?
For me, for me, it's all about the beige book. I think for me, it is all about anecdotal data and high-frequency data and these sorts of things, because the high-frequency data showed us before Friday that the jobs report might disappoint. And I think but the Fed speakers will want to talk, to people and find out what it is that is causing the trouble in the labor market, and that will inform their view a lot, I think, as we go towards September.
I know you look at commodities, and today there's a huge swing in aluminium, and this is because there's been a coup in Guinea. We'll talk about the politics of it in just a second, but it means that there's a scarcity of bauxite, right, which is used to make aluminium. Right. How long can this last?
So, I mean, I think how long the specific issue lasts, I don't know, but it does underline just how difficult supply chains have been in the commodity markets, right? And the moment you see a small disruption, a disruption like this one might not have caused the price to react quite as much. But the fact that we've got port closures in China, that we already have stretched supply chains, and so on, I think that just causes these knock-on implications, which pushes the price significantly higher.
Eddie, thank you so much for the update. Eddie van der Walt there from our Bloomberg Markets live team. Now, let's get more on the story. Aluminium has climbed to the highest in more than a decade. This is as political unrest in Guinea fueled concerns over supply of the raw material needed to make the metal. Well, joining us now is Bloomberg's Paul Richardson. Paul, good morning. So what do we actually know about this so far?
The situation on the ground is pretty calm at the moment. After the coup yesterday, the coup leader issued a statement last night saying that he's going to be meeting the members of the ousted cabinet to plot the way forward. The key concerns, as Eddie was touching on a short while ago, are what the impact is on transport in and out of Guinea from the mines, the bauxite mines, the gold mines, and the iron ore mines in Guinea.
So is this likely to actually cause lingering uncertainty in the region as a whole, Paul?
Sorry, say it again?
How much uncertainty does it cause to the rest of the region?
Look, West Africa has been a fairly unstable region in recent months. We've had coups in places like Mali, Chad, and Gambia. There's a potential response coming from the regional economic bloc, the Economic Community of West African States. They may impose trade sanctions on the coup leaders. that could further constrain supplies of bauxite from Guinea to the world market. That said, there's not that much support for the ousted president, just because when he came to power late last year, he had sought a third term after having a constitutional referendum to amend it to allow him to continue serving. So he's slightly unpopular in the region, and the question is just how hard ECOWAS, the regional bloc, will push to have him removed.
All right, Paul, thanks so much for the update. Paul Richardson there on Guinea. Now, stay with Bloomberg Surveillance Early Edition, because later on in the program, we discuss the latest on the German election. As the SPD is said to aim for a coalition with the Greens today, we'll discuss a climate issue. The DIW president and the head of ESG at Bayern Invest join us today. If you have any questions for our guest, please IB plus TV Go. You can also tweet me directly. This is Bloomberg.
Bloomberg.
Let's get the session started and wrap up the trading week.
News.
Who knew that one earnings story could take the entire market? There's upward pressure on wages.
Analysis.
This is really a slow, ongoing implosion.
Context.
Is there veracity to this granular data of ADP?
It's an ugly report.
The power of the Bloomberg terminal. The power of Bloomberg television and radio.
Tesla's the one that we got our eyes on.
Bloomberg has it covered.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacroix here in London. Now let's discuss private equity with our next guest. He's Antoine Flammarion, Tikehau Capital Chairman. Now, Tikehau is a pan-European asset manager and investor. It has more than 30 billion euros in assets under management. And earlier this year, it, for example, joined forces with billionaire Bernard Arnault and former UniCredit chief executive Jean-Pierre Mustier to launch a blank check company. Now, the resulting SPAC raised 500 million euros, making it the biggest of its kind in Europe. Well, Antoine Flammarion, welcome to Bloomberg. We have a lot to talk about, and I kind of, Antoine, want to start, talking about markets. So if you look at the stock market, there's a pretty heavy presence of people thinking that it will go up. I don't know whether you're also seeing a lot of private money going into companies such as Tikehau, just because the world is awash with cash.
Hello, Francine. Hello, everybody. Yeah, it's a good question, and markets are probably at more or less all-time high, and we all know that central bank have been helping that dramatically, and it's a big question. I think my first comment would be on inflation. Inflation is there, and we just discussed briefly aluminium, which is obviously tied to Guinea, what happened, but even before that, aluminium was almost at all-time high. And what we see right now is that multiples are crazy, valuation are very high. So we think that it would be really tied up to central bank intervention. But because inflation is coming, it could change very quickly. And nowadays, things are changing very fast. And when we look at what happened, in Chinese-related stocks, either Alibaba or Tencent, or during the summer with Amazon, things could change very fast with the market. We all saw, and we all have in mind what happened in March 2020 with the beginning of the pandemic. But I think the velocity of the market evolved. So on our side, we are probably cautious, but there are tons of opportunity on the other end as well, and I come to that in a minute.
So, Antoine, do you have any exposure to China with any of your deals? If the market, you seem to suggest that the market is going to move very quickly. I know you're committed to, for example, defense, you're committed to ESG causes. Like, how nimble and how quickly do you need to change tack when there are either supply chain issues or there's, cracking down in China?
Yeah, out of our 31 billion of AUM, we only have 4.5 billion of liquid assets. So the remaining remain private assets, private equity, private debt, real estate. So, obviously our investment base is a little bit longer, and we are not obliged, to change the cursor. I mean, Tikehau is not a hedge fund per se. So, we try to anticipate the long trend. Our exposure in Asia is mainly done through our Singaporean office, but we've got limited exposure to Chinese stock or Chinese economy directly. We've got indirect exposure. But, you have to be very reactive and on the ball, because, as I said, things are changing very, very fast. So it's important to have the long-term view, make sure that you manage money for the long term, which is fairly rare. But because of the structure of the money we manage, more than 10 years length on average, it's easier for us to maneuver and anticipate the longer trend. You mentioned energy transition, same thing for cybersecurity, same thing for aerospace.
Right. So Antoine, are you feeling like when you hold, is there a trend in private equity once you have a good company to hold on to it longer maybe than you would have 5-10 years ago? And if there is, why?
Usually people have done, control LBO and with an average length of, let's say 4 to 5 years tenure. I think what's changing now in private equity is that you see more and more people investing in minority private equity, trying to help company to grow. It's been done in tech, obviously, but in other sectors. So I think one of the large trend is we see more and more minority private equity. And the second trend is long-dated fund or investment vehicle, including evergreen vehicle. When you back a company, especially in new markets, and it's hydrogen, it's solar, it's cybersecurity, as mentioned before, you need time. Things are moving fast, but if you really want to grow a company and create more value for your shareholder and your investor, I think long-dated funds is a big trend. So I say two trends: minority on one end, and long-dated investment vehicle on the other end. And that's what we're trying to do here.
Antoine, when you look at some of the green investments that you're talking about, and we see that in asset management, I know you're longer term and longer trend and more ingrained in the real economy, but how do you avoid greenwashing? So you mentioned hydrogen. You can have blue hydrogen, you can have green hydrogen. And how fast, will this sector actually move with renewables and prices? So where do you find the best value right now?
I think, first of all, it takes time. So what you saw in the last 2 to 3 years is that a lot of people have been, doing some greenwashing and entertaining the fact that, they became suddenly green, but we know that it takes time. So first of all, it takes time, especially if you have legacy assets, and all the large institution, banks, asset manager, you've got legacy assets. So it takes time to change that. We used to say, it's important to innovate, and here at Tikehau, we've been really trying to innovate. So for instance, we launched energy transition back almost 5 years ago. So it's not 20 years ago, it's only 5 years ago. To do that, we partner with Total, which has been a very early mover, despite the fact that they've got obviously their own legacy asset, oil, gas, and all that. But we started 5 years ago, and now we start seeing the benefits because there are more and more foreign companies entering there. But it takes time. It's even if it's the flavor of the month, it takes time, and people have to be patient.
Antoine, talk to me a little bit about some of the sector funds that you have in defense. I know you're also involved, for example, in Asa Aerofondo in Spain. So how do you see this industry evolving?
Yeah, and you mentioned trend in private equity. What we see is minority, long-dated fund, and you start seeing sector focus fund, which is a little bit new because usually investors would like to invest in more, diverse pool of assets. We think that, because things are changing fast and because of the pandemic, some sector became suddenly super appealing, and aerospace, and we've been involved there, is one obviously of the key sector. So we decided to partner with industrial, which is something we do at TKO. So we partner with Safran, Airbus, Dassault, Thales, and we launch an aero fund in France and one in Spain as well. And the idea is really to invest in this vertical with the right industrial partner, the right team, obviously, because when you have people doing aerospace all day long, teaming up with the largest company in the world, then you can consider that probably you're going to do a better investment. But the sector has suffered a lot, obviously, as we all know. But you have to be contrarian, and the best way to create value for your shareholder and investor is to be contrarian. And I think this sector-specific fund was an obvious thing for us and for our DNA. And that's been, yeah, go ahead.
No, go ahead.
So, no. I was saying, it has been, defensive because the sector was turbulent. On the other hand, you can be offensive, and we launched a fund focused on cybersecurity because there, as you all know, there are threats everywhere. Same idea, another vertical. So you can be offensive or defensive, but sector-specific fund offers good value, we think.
Antoine, thank you so much. Antoine Flammarion there, TKO Capital Chairman. Now stay with Bloomberg Surveillance Early Edition. Later on in the program, we discuss the latest on the German election. As the SPD is set to aim for a coalition with the Greens, today we'll discuss the climate issue. The DAW president and the head of ESG at Bayern Invest joins us today. Now, if you have any questions for our guests, IB plus TV Go. This is Bloomberg.
Neptune was discovered, everyone wanted to do it because it was this clear demonstration that you can use math to discover objects.
Unfortunately, since then, no major planet in our solar system has been found. But thanks to modern telescopes, thousands of smaller objects have been discovered in the past few decades beyond Neptune, called trans-Neptunian objects, or TNOs. And planetary scientists at the California Institute of Technology have noticed some anomalies with these objects. Their hypothesis? A giant theoretical planet beyond Neptune, Planet 9. And thanks to a new telescope, equipped with the largest digital camera ever built, we may be one sky survey away from finally finding it.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
It's a
is really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
I don't think that it should come as any surprise that there is a spike in inflation right now this year.
We are not concerned by the current level of inflation in the EU or everywhere in the world.
Inflation is very much influenced by energy prices and food prices.
All the institutions consider that it will be a transitory feature, and we have to avoid that it becomes structural.
We think that this increase is a temporary one.
We are monitoring it, and we should monitor it very accurately, but without going to conclusions too soon.
We remain vigilant, but we are not concerned.
It is a natural feature of a very strong recovery that we're witnessing.
European finance ministers speaking about inflation at the Ambrosetti Forum in Italy. Now let's get straight to the Bloomberg. First for news, here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. The Taliban say they have captured the northern Panjshir province, the last pocket of resistance standing in the way of complete control over Afghanistan. A spokesman for the group said opposition fighters had now fled the province. The Taliban are expected to announce details of their new government soon. The UK's biggest business lobby has criticised the government over labour shortages, warning they could last as long as 2 years. CBI Director General Tony Danker says a perfect storm of Brexit cutting the supply of workers from the EU and the pandemic have left many sectors without the staff they do need. The CBI wants targeted immigration to fill job gaps. The London Metal Exchange will reopen its iconic Ring Open Cry trading floor today after closing it 18 months ago due to the pandemic. The Ring is the last spot in Europe where traders still set benchmark prices by shouting out orders at one another. But many fear that volumes will be sharply lower than before the closure, possibly making the Ring's continued operation uneconomical. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thank you so much. Now, coming up, Germany's election is looming on the horizon. Environmental issues, of course, have been a key battleground for parties. We get the latest on that next with our German election special. This is Bloomberg.
somebody said, I want to be the next Reid Hoffman, what would you say is the best training ground to do that?
Well, I'm still young enough that I'm still hoping to be the next Reid Hoffman myself.
Global markets never sleep, so stay connected with Francine Lacqua in London, Matt Miller in Berlin, and Kaylee Lyons in New York. Perspective on the day ahead. Bloomberg Surveillance, Early Edition. Weekday mornings on Bloomberg Television.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
The SPD opens a 5-point gap ahead of the CDU with just 3 weeks to go ahead of the German election. Armin Laschet visits the flood-hit regions of the country as activist Luisa Neubauer says no German party is doing enough to halt climate change. We'll hear from our interview. Plus, we're also live at the Munich Auto Show. Don't miss our conversations with the chief executives of Volkswagen and BMW. How will Germany's big manufacturers manage the transition to clean energy? Well, good morning, everyone. I'm Francine Lacqua here in London. Welcome to Germany Decides, a series of special programs in the lead up to the German election on September 26. Now, it's less than 3 weeks until Germany's election. Environmental issues have been a key battleground for the parties. With a heavy reliance on coal for electricity generation and a thriving industrial sector, the country is Europe's biggest polluter. Now, but can Germany cut its carbon footprint without actually denting jobs and economic growth? Well, let's get more from Bloomberg's Maria Tadeo over in Berlin. Maria, good morning to you. A lot of the talk, of course, is on what kind of coalition we could get. Where are we on climate change? Is it really left, front, and center in this election campaign?
Yes, Francine, it really is. This is a huge talking point going into the election. When you look at polls, they tell you that close to 40% of Germans view this as a top priority for the next coalition government. There's a number of factors, of course, that are feeding into this. One is the demographics. We do see the new generations who say we want to go greener and climate is a big priority for us. You have the European push going into this. Remember, the European Commission has made the Green Deal the cornerstone of European policy for the next 30 years. And then, Francine, of course, we had the floodings that happened just a few months ago here in Germany, and that's had a huge impact on the German psyche. You know, the fact that more than 170 people died because of extreme weather has really made this now a conversation that really resonates. So when you look at the different manifestos from pretty much everyone, the CDU, the SPD, and of course the Greens, they all say climate neutrality will have to happen in the next 20 years. Now, the issue here is what kind of policies and also the targets, and that's when you see the differences between them begin to trickle down.
So, Maria, what can you tell us about the possible coalitions? I know there's various possibilities, but you know, could the Greens end up being kingmakers?
Well, you know, at this point, Francine, the assumption is that the Greens will join in whatever coalition, whether this is led by the SPD and you go for a traffic lights, or you go with the CDU, and that becomes a Jamaica formula going into this. They will play a key part. So they will have a big say when it comes to climate policies. And when you look in detail at their manifesto, they have the most ambitious targets. They say Germany needs to be climate neutral in the next 2 decades. So put that at 2040. That is 10 years before the European deadline, which is 2050. And they also say when it comes to diesel and heavily polluting cars, they need to be taken off the road. However, for the CDU, that would be something that would be difficult to stomach, especially also too for the German industry, which says that until now they don't have clear guidance. The CDU does say that you need to find a way to protect both climate and the environment. But as you know, the German government in particular, led by Angela Merkel, has not had a good track record when it comes to climate reforms.
All right, thank you so much, Maria Tadeo there with the very latest from Berlin. Now, joining us to discuss all of these issues, green issues, but also what kind of coalitions we could be looking at in Germany, Marcel Fretscher and Bernhard Grünhelg. Well, Marcel is the director of the DIW, or the German Institute for Economic Research. Bernhard is the head of investment strategy at ESG Research at Bayern Invest. So thank you both for joining us. We'll talk in just a couple of minutes about the green energy transition and what kind of coalition is best. But Marcel, let me start off with you. When you look at the various possibility of coalitions, the polls and actually the margin error, is everything still to play, or is there a hunch that actually, you know, the Greens will play, if not a significant part, at least a part in the next government?
It is very likely that the Green Party will be part of the next government. It's also very likely that the Liberal Party will be part of the next government. So it's very likely that there can be no two-party coalition having enough votes, which means the two most likely outcomes are either traffic light coalitions, so the Social Democrats with the Chancellor Scholz and the Greens and Liberals, or the Conservatives with Mr. Laschet and the Greens and the Liberals. And as you described, the Greens are the most progressive, the most ambitious, the party with the clearest plan and measures on climate protection. The Liberals are probably the most critical among possible coalition partners who don't only want to push back the deadline of climate neutrality, but also who put a very clear priority on reducing debt and fulfilling the debt break over public investment, including in climate protection. So both parties are likely to be in, and it's very interesting how this will play out.
Bernhard, when you look at the main issues, what do you think people will actually vote on, you know, come September 26th? So there's a lot of talk, there's, you know, polls, but September 26th, you're a mom or a dad or, you know, a single 20-year-old Berliner, and you're about to actually decide who you vote for. Has it changed from the last election, your priorities and what you're afraid of?
I would definitely say so, yes. Climate issues are high on the agenda, even not top on the agenda of most of most people, and especially, of course, among the younger people, it's high on the agenda. But so is also the fiscal and tax policy and the social security system. So we have a couple of important issues at these elections at stake, and it's in the end, it's interesting to see how the government will form and how the coalition negotiations will translate into the politics that are then pursued by the new government. But in the end, we have a lot of interesting topics, and climate policy is high on the agenda for sure.
All right, thank you both. Marcel Fretscher there and Bernhard Grüngel. Stay with us, and we'll talk also about possible inflation shocks and some of the other things in the campaign. Coming up, despite a summer of devastating floods, activist Luisa Neubauer says no parties are doing enough to halt climate change. We hear from one of the organizers of the school strike for climate movement in Germany. That's up next, and this is Bloomberg.
has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Crypto, you have a world of young people that want their own financial system and their own culture. And it is very powerful, and I'm a big believer in it.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, after a summer that saw devastating floods across parts of the country, climate change has become a key issue ahead of the German election on September 26. But activist and campaigner Luisa Neubauer says that no German parties are doing enough to keep the country on the right track to halt climate change. Well, she spoke with our Maria Tadeo.
Speaking of one of the richest countries in the world, we are speaking of one of the high-emitting countries in the world. We have a huge moral, historic, and current responsibility. And there is not a single plan of a party that is actually fitting what is needed for 1.5 degrees. That's huge. That's such a scandal, and we need to talk about that. We need to talk about the inability and the lack of any kind of political will to actually speak about the danger of the climate crisis and provide a plan that is suitable for the crisis itself.
When you hear that Armin Laschet says and the CDU, we don't want to spend and take on more debt because it would be bad for the younger Germans. You know, you represent many of those Germans. Is that a false premise?
Well, I would love to talk about the financial debt that we will see in 2050 or 2080. But for that, we would kind of need to have like a livable planet to be on. So right now, the ecological debt that the government is taking up and that is putting on our shoulders is irresponsible, it's absurd, and there's no way to justify that. So we know that everything you do today to prevent the worst damages of the climate crisis will pay off later. And we know that the delaying action is just more costly. It's taking not only more money, but also more lives and more livelihoods. So, of course, that the way one of the chancellor candidates, Armin Laschet, is arguing here is completely twisted and far away from the scientific evidence as well that we have about the climate crisis and climate action.
When you look at the demographics in German politics, they're very important. You know, the age that a voter has does determine his political inclinations to some extent. The older Germans are not that concerned about climate. I wonder if there's anything that the younger Germans who are going to be affected by this can do to switch that perception?
We need to ask the question, like, why would people not find climate action important, given that that's the most existential crisis we've ever experienced? And that has, of course, to do with politicians pretending that this crisis wasn't a big deal, pretending that the climate crisis was just an issue of activists and of scientists, and pretending that real politics cares about real issue, and that's everything but the climate crisis. So, of course, people take that as an example, and of course, people look around to political leaders when making a decision about how important the climate crisis might be to them.
You say the science has been very clear, but politicians have painted climate as a question of activism, perhaps of political bias too. What do you respond to politicians that say, you guys are so hysterical, you're creating panic about the environment? How do you respond to that?
Yeah, that's we hear that a lot. Politicians coming up to us saying that we need to be more patient and that we shouldn't, paint such apocalyptic pictures because people would be, unsettled by that. And honestly, I wish we wouldn't have to do that. I wish we wouldn't have to talk about the crisis every day. And I wish we wouldn't have, or we wouldn't feel the need to wake up this country and the society and point out that there's a crisis every day. This should be the job of politicians, and it should be their job to speak to the people about the crisis ahead and our plans to fix it and our plans to challenge that crisis. But given that's not happening, someone has to do that. And that politicians don't like it, well, I'm sorry for them. We have a crisis to deal with. And if, those in charge are not rising up to the responsibility, we're doing it fine.
Well, that was German climate activist Luisa Neubauer speaking with our Maria Tadeo. Let's discuss now how climate policies could actually impact the election. We're back with Marcel Fratscher and Bernhard Grünbeil are still both with us. Bernhard, if we go back to some of the things that we were talking about, maybe some of the climate change and other policies that will really dominate some of the things that we're looking at, give us a sense of high energy prices. Are voters worried about energy prices spurring into inflation, or they look at energy through the lens of climate change?
Well, I would say it's rather energy prices through the lens of inflation at the moment, because energy prices through the lens of climate, it's more of a longer-term topic. But still, both are relevant, and both factors need to be factored in the election decision. So I also would guess that it's more or less along the same line of demographics as you stated it before. So I guess for the short-termism in politics, it's rather the inflation topic and whether you feel it in your own pocket if energy prices go up, but it's also important for the climate issue, of course.
Yeah, Marcel, how do you see high energy prices becoming an election issue?
High energy prices are not yet an election issue. I think people are more worried about the future, and the narrative of some of the parties is having good jobs in the future and climate protection are a contradiction. That's a narrative that people believe. We must not forget the 2010s were very good economic years in Germany. We have record low unemployment, wages have been increasing. So people are looking back to the past and say, we want to go back there. And some political parties are very successful in saying, look, if we move too quickly on climate protection, it will destroy many good jobs. And I think that's a challenge for politicians to explain exact opposite is the case. Climate policies and good economic policies are two sides of the same coin. For Germany to keep the success it has had, being very competitive in global markets, German export companies being very strong, to keep that competitive advantage, Germany needs to move quickly in the economic and climate transition. And I think that kind of awareness, that's where the population is split during this election. Some people have understood that, others are afraid of their jobs, and some politicians are very successful in fear-mongering and making climate protection look as if it was bad economic policy.
Marcel, I have a very good question actually from a viewer that is writing in. Please, everyone, send as many questions as you want. We love interacting with our viewers. This person's writing in, Marcel, and they're basically asking, is there any sign that Germany might ever consider its energy space on nuclear?
There are discussions. As you know, Germany took a decision, the Chancellor took a decision to exit nuclear power about 10 years ago after the Japanese tsunami and nuclear disaster. But I think that has very little chance of happening, that we now reconsider in Germany the issue of nuclear, because we know from many scientific studies that building nuclear plants is actually very expensive. It's actually a lot more expensive than renewable energy by now. So I don't see Germany taking the path of changing course. But of course, we have many other European countries like France that built a lot of their production on nuclear power. And I think we need to find a European solution to that. And I see the need for that to be phased out slowly. But for Germany, I don't think this is an issue.
Bernhard, do you actually see, nuclear coming back? And there's also a very good question, actually, on what the next German government can do for automakers, but also other industries to make the transition to a greener economy easier.
Agree with what Marcel Fratscher just said regarding nuclear stance of German politics. But we have to keep in mind that we need a European regulation on that angle as well, because in the end, if I speak from a financial market perspective, we have the taxonomy in Europe, and there you need to define whether, for example, nuclear energy is taxonomy aligned or not. And I'm sure that there are parts of Europe who would love to have nuclear energy rubber stamped as sustainable, and in Germany we see it differently. So we have to work around this issue, and well, as it's usual in politics, we will obviously see some middle way, I would say. And in the end, German politics, I would say, for after the next election is not changing course dramatically, but it's rather a question whether we will have more regulation and obligations for companies regarding climate policy, or whether we will have more incentives and subsidies on the other hand of the spectrum. And we need to position ourselves and find a middle way on that. And for the financial markets, we need to build portfolios that are robust on different outcomes of the election regarding that specific issues of climate policy.
Okay. Thank you both for joining us for a good conversation. The DIW Director, Marcel Fretscher, Bayern Invest Head of ESG Research, Bernhard Grünegel. Now, coming up, BMW boosts its battery orders on EV demand. Its chief executive tells Bloomberg the chip shortage is here to stay for months. Up next, we're live at the Munich Motor Show. This is Bloomberg.
Are you still committed to the U.S. pickup market? You mentioned how small it is, and I know you do good business at the frontier, but a lot of times Americans want something bigger like the Titan. Is that, do you plan to stay in that market as competitive as it is?
I mean, for us, market is one thing. The second is what customer aspires for from Nissan. And customer in United States aspire for sedans, SUVs, and the pickups. And Titan is a great pickup truck, and we are, of course, focusing on the Titan. But as I said before, that in our whole lineup, our main focus is always been in the sedans and SUVs and the smaller pickup truck.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
BMW is a customer-centric organization, and we follow the markets. And the first results in 2021 of the first half year showed that we are gaining market share, we are growing, we have a sustainable business approach, and now electromobility is really keeping up the pace, and we are right in the middle of it. You see it with the i4 and the iX, which we have here, which generate a really enormous response from the markets. So we are right in there, and we are very positive about our future.
Well, that was BMW Chief Executive Oliver Zipse speaking to Bloomberg at the Munich Motor Show. Now, the International Motor Show has found a new home in Munich after almost 7 decades in Frankfurt. My colleague and co-anchor Matt Miller is in the Bavarian capital for us. Matt, I'm really looking forward to every day talking to me about cars because you're so excited about them that I get so excited about them. So what's hot that you're looking at?
Well, it's hot. Well, you know, I just saw the new all-electric Mercedes G-Class, and I have to say that's probably one of the cars people are most excited about. It's only a concept right now, but we know they're bringing it out probably next year. There aren't as many cars here as there are at a typical car show. At Geneva, at Detroit, at New York, you see a lot more vehicles. This conference is really, this auto show is really more about the mobility side of things. So the self-driving technology, the battery technology, and the kind of mobility models, business models that car makers are counting on for a huge part of their revenue in the next decade or so. It's less about the actual iron and air, the metal and rubber that I usually get the most excited about. But there are still a few cars sprinkled here and there.
You did tell me there were some really, really cool cars. So how much of the focus is now on EVs? You know, Matt, is it all about EVs, or is there still space for like the more traditional, you know, diesel guzzling cars?
It's mostly all about EVs. I mean, you heard Oliver Zipse there. He was talking with my colleague Elizabeth Behrman about the fact that they've just put in a $24 billion order for battery cells. It's also very much about chips. I think, you know, mobility is the stated theme of this car show, but the real talk is about when are we going to get the chips we need? How are we going to allocate those chips to the products that we're making? Are we going to get as many battery cells as our competitors? So it's really a scramble for supply chain, or supplies, I should say, as the supply chain faces bottlenecks and there's so much demand for these new higher tech products.
I mean, I want to ask you how exciting it is actually being at a conference with real people around you, because I know we haven't done it in about 18 months, but I need to ask you probably about the chips. How much of a delay will there be, Matt?
Well, you know what? The delay seems like it's worse than had been anticipated. I was talking with the CEO of Volkswagen, Herbert Diess, and he said, yeah, we were hoping at the end of the summer this would be dealt with, but now we're in another crisis situation, and it could be months, it could be years before we've dealt with this. So they're doing as much as they can to produce. They're having to ask for government help in, you know, bringing chip manufacturing back to Germany, just as American manufacturers want to bring it back to the U.S. In terms of being at a show, being at an actual event, seeing people that I haven't seen since March of 2019, which is the last car show, it's exciting, but I think, you know, I've gotten about 20 messages from our HR department today because they're so worried that I might get COVID.
Matt Miller. All right, Miller on the loose, watch out.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
There is a spike in inflation right now this year, and we have to avoid that it becomes structural.
There is a need to invest more in semiconductors so that we can get rid of this dependency.
The second half is more difficult, and that is what we see now. It is more difficult. It's here to stay, the problem, for many months.
This is Bloomberg Surveillance, Early Edition, with Francine Lacqua, Matt Miller, and Keely Lines.
Well, it's 10 a.m. here in London, 11 a.m. Berlin, 5 a.m. in New York, and 5 p.m. in Hong Kong. Our top stories today. Disappointing jobs numbers, the smallest increase in 7 months, adds to uncertainty over the Fed's taper timeline, while U.S. markets are closed for Labor Day. Aluminium surge prices hit a decade high as a coup in Guinea fuels concerns over supply of a key raw material. Plus, we're live at the Munich Auto Show. We'll bring you our conversations with the chief executives of VW and BMW, plus many more. Well, good morning, everyone. First of all, to all of our American viewers and friends, happy Labor Day. I'm Francine Lacqua here in London. Tom McKenzie is with me. Keely Lines off today for the holiday. Matt Miller will be joining us from the Munich Auto Show. So, Tom, thank you so much for joining me. There's quite a lot going on in the markets. Treasuries, of course, closed. A lot of the U.S. markets are closed. But after that NFP number, it'll be interesting to see exactly how market positioned themselves ahead of the Fed minutes later on this week. Or the beige book.
I was just going to say, investors obviously taking into account a change in that time frame for the taper. There was a view that from some that maybe you're going to get it in September. The announcement that now has been pushed back, at least by the likes of Bloomberg Economics, our own in-house team. Maybe November, maybe December in terms of when that taper starts to kick in. A divergent picture when it comes to those non-farm payrolls. Of course, the overall number missed, but the wage growth was quite substantial. We're focusing on what's happening in the markets in Asia, closing very much in the green for China. There's a view from Nomura that maybe you're at a point where these regulatory pressures have bottomed. Certainly, you saw some upside for technology stocks like Tencent in the session today. Japan continues to provide some positive headwinds for Asia on the back of those changes politically and the view that maybe you're going to get additional fiscal support. So the CSI 300 over in China gaining more than 1.8%, closing the session much higher. Shanghai almost pairing all of the losses since February. So that continues the upside for Chinese stocks. 11 straight days of flows from foreign investors from the stocknet onto the mainland. That has been underpinning some of that optimism in China. That has flowed through into what we're seeing in Europe. You've seen gains across the European session and across the indexes. You had some data out from Germany pointing to some upside for the factory sector for the month of July. The CAC 40, it was also positive. The FTSE 100, you had the CBI coming out and giving the government here a tongue lashing about concerns around supply chains. Francine.
It's really interesting, Tom. So if you look at European stocks, they're actually on the high, gaining some 0.5%. Again, low volumes because of Labor Day. The focus is on the fact that if the Fed needs to do more, that will be quite supportive of some of these cyclical assets in Europe. But it was interesting, though, that the reaction on Friday after that jobs report was the market really not knowing what to do. Is it worse than expected, meaning that we'll get extra Fed stimulus, or is it actually so bad that it means the economy is tanking? The other one I'm watching out for is aluminium hitting a decade high amid political unrest in Guinea. So we'll have a lot more on that. Aluminium commodities definitely at the forefront. And then, Tom, I also want to get your thoughts on China. Now, after almost 7 decades in Frankfurt, the International Motor Show has found a new home in Munich. The IAA in the Bavarian capital will be Europe's first major car showcase in 2 years, a chance for automakers to show off the fruits of their labor. But car makers like Audi will be sending smaller teams, and the show is overshadowed by concerns that major deal opportunities could be canceled amid a COVID resurgence. Well, my co-anchor, Matt Miller, is in Munich for us. Matt, I get so excited when you're at an auto show. I know I'm not as excited as you are, but the focus is actually on batteries, I guess, chips and mobility.
Yes, and the aluminium. We can add many syllables, and still there isn't enough of it, right? The problem is they have shortages of almost everything they need to build cars at a time when demand is just shooting higher and rates are so low that most people are able to borrow and buy these cars. So they really need to figure out a way to get enough batteries. They really need to figure out a way to get enough chips. And they thought that at the end of the summer, these shortages would be solved. The problem is that they haven't. So now they're looking months or even years into the future before they can deal with that. And they're having to figure out which of their units or which of their products deserves the supplies that they do have and able to boost margins to a higher level.
Yeah, Matt, some really important lines that you managed to extract from the executives there on the ground in Munich about their views on supply chains, semiconductors. How is that positioning the automakers? How are they restructuring or reconfiguring their business to cope with those constraints?
Well, they have really three major focuses. They might say two. One is producing more electric vehicles. So they're allocating what supplies they can get to the electric vehicles in order to boost those sales. The other thing is that they're focused on really is mobility. They expect to get some of them 15 to 20% or even more of their revenue from mobility solutions. That's jargon for car sharing or taxi ride-hailing services, even delivery services. And then the third leg of the stool really is China. And this is, I think, where there's even less visibility because everybody wants to be a big player. Volkswagen is already the biggest foreign player in China, but no one really knows what regulation is going to be like going forward, and they all have joint ventures working with state-owned companies. So they really need to be careful in China, but they can't avoid it, and they really need to allocate their resources to mobility and EVs, which need, for example, both of those, a lot of chips.
Miller, that's all well and good, but I want to know what cool little sports car you and I are getting to go on the surveillance early edition road trip, you know, ahead of the German election.
You know what? I like the Polestar 1. It's not a brand new car, but it's very limited in production. They're only making 1,500. I think it is still the most beautiful car at this show, even though the first time I saw it was in March of 2019. And I think you would like it a lot as well, Francine. Very good for the environment.
Okay, I like that, the fact that it's good for the environment, even if it's not Italian-made, or we get one of those like booster cars with, you know, the goggles. I think they would suit me great. And you can do the driving, Matt Miller, at the Munich Motor Show, of course, joining us again throughout the program. Now, aluminium has climbed to the highest in more than a decade. This as political unrest in Guinea actually fueled concerns of supply of the raw material needed for the metal. Joining us now is Bloomberg's Paul Richardson. So, Paul, in order to make aluminium, or aluminum, if you're American, you need bauxite. What do we understand this coup means for, you know, the mining of bauxite and actually bringing it to and from where it's needed?
It's essentially a constraint on the supplies of the raw material out of Guinea. As things stand, we're trying to establish what the situation is in terms of moving supply in and out of Guinea. The coup leaders yesterday closed the country's land borders. We're trying to establish whether that affects the ports as well. As things stand, we understand that the ports remain open. Yeah, I mean, it obviously has a significant impact on supplies, given it's such a big producer of bauxite, the world's biggest exporter.
Okay, Bloomberg's Paul Richardson on the implications of the coup in Guinea, what that means for bauxite and the impact, the flow-on impact to the aluminium space, of course, as well. And we've seen the prices jumping to above decade highs today. Okay, let's switch focus to the U.S. economy, adding just 235,000 jobs in August. That was the smallest gain in 7 months. The soft report seems likely to prompt Fed policymakers to delay tapering. Francine, the top line was obviously a big surprise in terms of the forecast, but the wage growth was quite substantial. Yeah. Some of the guests we've had on this morning suggesting that maybe that is the silver lining here.
Yeah, I have to say markets were all over the place on Friday, right? Because they saw this huge miss and then they say, right, but then maybe if you have wage growth, it's inflationary. Does it mean that the economy is really much worse than expected, which means that even if there's stimulus from the Fed, it won't do much? Or actually, does it warrant more stimulus? I mean, we had 2 hours where you saw volatility like up and down for equities. I think now they're maybe stabilizing a little bit, Tom, but you're right. It's all about the wage growth. So is it, I mean, why are people not filling those, those places? Is it because they're holding out for better jobs? That would be inflationary, but it would also point to a strong economy. Or is it just that people would rather stay at home? I don't have the answer to that, but it's probably what traders are trying to figure out.
Well, let's get more on that then with MLive's Heather Burke. Heather, what is the investment community's assessment then of this very mixed picture that we got on the jobs front, where it leaves us in terms of the tapering time frame, and dare I say it, the dot plot as well?
Good morning. The jobs report didn't really seem to please anybody on Friday because you had stocks ended the week little changed. You had yields really didn't budge for the week on 10-year treasuries. Basically, you had this confluence of disappointing payrolls and also higher than expected wage inflation. U.S. futures, the cash markets are closed today, seem to be up a little bit today. So stock traders may be thinking, okay, this is going to delay Fed action. The consensus among markets is that most likely a Fed tapering decision will be delayed from September, perhaps into November. But this also raises questions about, are we going to be seeing a long period of wage inflation? In fact, one reader on Friday on the blog brought up the specter of 1970s stagflation.
Heather, what can you tell us about, I mean, I imagine that what markets now want to know is, they want to hear from Fed presidents to have an idea of what exactly they make out of the jobs report on Friday. So what's the next data point, or when's the next time they can hear from someone from the Fed?
Well, we've got, we'll have some Fed speakers coming up going into the meeting on September, but the meeting in mid-month will definitely probably be the focus where we'll see how the Fed has processed the job reports from last week.
Okay, Heather, thank you very much for those insights. Heather Burke of Bloomberg Markets Live. Coming up this hour, we're going to speak to SocGen Chief FX Strategist Kit Dukes. We'll discuss the US jobs miss, of course, and look at the risks ahead for the ECB, that meeting later this week. Your markets in Europe are pointing up solidly in green territory. The futures as well in the US. Labor Day closed, cash trade, but futures are positive by 0.2%. This is Bloomberg.
After 16 years in power, actually, remains one of the most popular, if not the most popular, German politician ever. Who's the right person to fill those shoes?
Well, whoever is going to be filling those shoes is going to have a very hard time. Look, as the Merkel era ends, most of the certainties which we Germans, during 16 years of Merkel, tended to take as forever are evaporating before our eyes. The eternal assurance of the United States always protecting us, that's gone out with Donald Trump. The certainty that we will build an ever closer union, the EU, has gone out of the window with Brexit.
A lot's happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
I support the new framework.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London with Tom McKenzie. Katie Lyons is off today. Matt Miller is on the ground in Munich. So let's get straight to the markets. Again, thin volumes, or thin compared to other days, just because it's the 6th of September, which means that it's a bank holiday in the U.S. Happy Labor Day, everyone, if you're American near and far. Now, the NFP reaction on Friday, non-farm payrolls, was, I have to say, remarkably bland, given that what a large miss it was. That was according to our Mark Cudmore. Today, European stocks actually rising. U.S. equity futures also rising at the margin. Investors now betting that a slower hiring in the U.S. may delay tapering by the Fed, and also look at aluminium hitting a decade high amid this political unrest in Guinea. Now, joining us to talk about the markets, NFP, to talk about inflation and everything in between is our Eddie van der Veld of Bloomberg Markets Live. Eddie, always great to speak to you. We also have the ECB on Thursday. But what's the main question that you want answered after that non-farm payroll number on Friday?
Yeah, look, I'm going to disagree a little bit with my boss here, Mark Cudmore. I think it's interesting that, yes, the closing level for the markets on Friday was, muted. It was fairly unspectacular. But during the trading session on Friday, there was a lot of excitement. And it was clear that traders were struggling to interpret that non-farm payrolls, read, particularly because, we've had jobs numbers that were so disappointing and wage inflation that was such a big beat again. So I think this is really interesting. And, I think back to your point, the most interesting thing for me going forward will be anecdotal data, because the market needs to interpret and needs the Fed to interpret for them just exactly what it is that is going on in the underlying economy. Are we actually heading for this stagflation scenario? And for that reason, I think the beige book is going to be the absolute most important thing this week.
Eddie, are you seeing positioning around that stagflation trade?
It was really interesting on Friday, because what we saw was we didn't see the break-even rates move an awful lot. We saw nominal yields bouncing on the news, and then at the same time we saw gold bouncing on the news. We saw really different readings on this, and I think the market just doesn't know what to make of it, heads or tails.
What does that mean for inflation, Eddie? So you could, it's either a positive, because, okay, inflation is high, and this is what you were telling us before. Maybe people just want to hold out until they have their dream job, or it could be a huge miss because actually the economy is losing a lot of steam.
Yeah, I think so. I think that is the problem, right? I think we don't know. I think, I did a poll on Twitter the other day where I asked people, look, where are we? Are we are we still in recession? Where are we in the business cycle? Are we still in recession? Are we seeing, the early expansion phase, or are we between double dips? And people don't know. I got such a wide range of responses on that. I think this is the problem for the Fed. The Fed does not want to take the stimulus away too soon. But at the same time, they are starting to see the whites of the eyes of inflation. And therefore, they don't want to keep their foot on the gas pedal for too long.
Eddie, I just want to get your views on the dollar. It's a surprise to some, maybe. You're seeing the strength that's coming through. Currently, euro dollar, for example, 118.63, so lower on the back of a stronger greenback, despite the fact that the tapering question has been pushed out, arguably. What does it mean for emerging markets, particularly where the dollar direction at this point?
Oh, the dollar is everything in markets right now at the moment, isn't it? I think you nailed it there. Listen, I think that the dollar is the ultimate haven play in markets at the moment. And because people are struggling to interpret that NFP number, I think there is a little bit of a bid on the dollar. What I'm interested to see is that the dollar, is doing well, and at the same time, gold is doing well. So I think that's because that's not something that we see very often. There's a real split at the moment in how the market is interpreting this.
Okay, any excuse to talk about pets, Eddie, because if you follow us on Twitter, Eddie and I spend a good amount of time actually, doing some banter, as the Brits would say, about what pets Eddie should get. And actually, there's a huge business story about it, right? Because just the number of pets that people own since the pandemic has skyrocketed, but now they're bringing them less to the vet. What's going on, Eddie?
Yeah, Francine's trying to convince me not to get a bunny, but to get a dog. But I'm still up in the air. There's been huge demand for pets ever since the first lockdown, and it's we're seeing some of that feed through into the stock markets. Pets companies and pet supply companies have been doing really well, but now the narrative is as people go back to their to their offices and so on, perhaps some of that demand for pets and for pet supplies will start falling. I don't know if that's true. I mean, if people have already bought the pets, they're still going to have to, buy the supplies for a number of years in the future. We shall see.
Okay, Eddie, if the Fed tapers before October, you get a dog. If it's after, you get a rabbit. I mean, how's that? If you trust the markets, you trust the markets. And
right.
If you don't...
Well, that's something as good as anything to position on right now. Which pet do you want Eddie to get? I think, because at the moment, the market fundamentals are just so hard to read.
All right, we're going to watch that one very closely indeed, Eddie, and his focus on bunnies, or not, depending on what happens with the taper. Eddie van der Vold, thank you very much, our Markets Live team on all things Fed and pets. Coming up, European ministers and EU officials weigh the risks posed by inflation. We're going to hear from the top guest that spoke to Bloomberg at the Ambrosetti Forum. This is Bloomberg.
Come together to help less developed, fragile, vulnerable countries with adaptation and resilience, and we can do what we developed world need to do to reduce the damage being done by our practices of the way we produce energy.
But how likely is it that we keep that 1.5 degrees within reach?
Well, look, the Paris Agreement said well below 2 degrees. That's what everybody signed on to. What is well below? It's certainly not 1.9 or 1.8. It's somewhere close to the 1.5 degrees. And so I think it's very important to do it because every decimal point of rise in temperature is remarkably compounded in the damage that it does. We're at 1.2 degrees today, and you see what's happening. Imagine what happens when you're at 3 degrees or so, which is the track that we are currently on.
The power of Bloomberg.
Let's get the session started and wrap up the trading week.
News.
Who knew that one earnings story could take the entire market? There's upward pressure on wages.
Analysis.
This is really a slow, ongoing implosion.
Context.
Is there veracity to this granular data of ADP?
It's an ugly report. The power of the Bloomberg terminal. The power of Bloomberg television and radio.
Tesla's the one that we got our eyes on.
Bloomberg has it covered.
Happening on the ground right now, just in terms of consumer price tolerance?
We see a strong consumer right now. And you can see that even in the early starts to back to school and back to college season that we're really pleased with. And I think if we step back and look at the quarter, we see the evidence of that strong consumer.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? combustion engines get electrified.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua in London with Tom McKenzie. Kelly Lyons is off today, and Matt Miller is on the ground in Munich. To our American friends far and wide, happy Labor Day. Now let's get straight to the Bloomberg. First word news, and the price of aluminium climbed. That's something that we keep on looking at, climbing to its highest in more than a decade following a military coup in Guinea. The West African nation is a major exporter of bauxite, the raw material used to make the metal. Now, the head of Guinea's special forces says he took action to address financial mismanagement and corruption. In the UK, it's likely to be a tough week for the British Prime Minister, Boris Johnson, in Parliament. Today, he'll be forced to defend his handling of the Afghanistan crisis. Plus, Johnson faces a backlash from his own Conservative Party over reports he is planning a tax hike on workers for boosting funding for social care. Well, that's something the party has pledged not to do. President Biden's chief medical advisor says booster shots against the coronavirus are likely to start only with the vaccine by Pfizer and BioNTech. While Anthony Fauci told CBS the Moderna shot may be delayed, those comments may lead to more clarity on the administration's stance. While some medical experts are unhappy over what they see as political interference in the review process for the shots. And it was a record-breaking weekend for the first Marvel film featuring an Asian superhero. Now, the Disney movie Shang-Chi and the Legend of the Ten Rings took in more than $71 million at theaters in the U.S. and Canada. That blew past estimates and was the biggest opening for a movie over the Labor Day weekend. I have to say, Tom, I haven't been to the theater in quite some time. I'm looking forward to James Bond, that apparently could be delayed once more. And my sympathies to you, because I know at number 4, Disney has Paw Patrol. You have younger kids than I, so you'll probably end up having to sit through 2 hours of Paw Patrol.
Yeah, I pray, please, no. I'm hoping to wean my daughter off that before the movie comes out, because that is quite something to be dragged into that for 2 hours. But yeah, look, this is a good win for Disney. They didn't do so well with Mulan, which was, of course, aiming for that Asian audience as well, the Chinese audience. But they got, what, Shang-Chi got 71 million, as you said. Shang, by the way, meaning up or increasing, and Chi, energy, increasing energy. So it's done really well on its opening day in the labour market, on Labor Day, I should say. But Paw Patrol will be giving a miss, Francie.
Yeah, that's what you think. I know your kids are watching Bloomberg now. We're talking about Paw Patrol, and they'll probably say, like, Papa, we need to go and see Paw Patrol. I'm interested, Tom, to talk about China, because, we're trying to figure out exactly what this change in terms also how they crack down or how they deal with celebrities means for foreign investors. I mean, you've lived in China. You've just come back from China. Any insight into exactly how much they can still crack down?
Well, there's obviously a lot more that they can do in terms of squeezing some of these sectors, but it is remarkable because that industry built up around celebrities is substantial. So they're taking aim at that. Bad news for the celebrity fans out there. Maybe parents will be cheering this on, though, Fran.
Yeah, maybe. We'll talk about Europe shortly. This is Bloomberg.
China
China has been focused for a long time now on catching up to the United States in space when it comes to space exploration, and they've really made a couple of really impressive achievements. For instance, in May, China landed a rover on the surface of Mars. It's only the second country after the United States to manage to do that. In June, China sent astronauts to its space station, which is still under construction. China is not part of the International Space Station because the United States worked to exclude China from that. But instead, the Chinese are working on their own. That's scheduled to be in full operation, I think, next year. The Chinese have really come a long way in space. That said, all of that's run by the Chinese government. There is a role for Chinese companies to play in the space program. They're not being as front and center, say, as Elon Musk with SpaceX or Jeff Bezos with Blue Origin. China's companies are playing a more supportive role, I think it would be a fair way to say it, working on things like satellites, rocket launch operations. They're leaving the really big, sexier items when it comes to space exploration, leaving those to the Chinese government.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
This is Bloomberg Surveillance, early edition. I'm Francine Lacqua here in London with Tom McKenzie. K-Lines is off. Matt Miller will be joining us from the Munich Auto Show. Tom, first of all, good morning, and thank you so much for being with us. I know a lot of people are off in the U.S. because it's Labor Day, which means that a lot of traders are off. Also, treasuries aren't really opening in terms of cash treasuries. So actually, volume is going to be pretty thin.
Yeah, absolutely. Look, as we were discussing with Eddie prior to the break, there is this confusion still amongst investors as to how to interpret the jobs data. 235,000 was the print, but the wage growth was much higher. How do you play that into your views on the taper, the dot plot maybe, the inflation expectations? Are we in a stagflationary environment? We wanted to touch on China as well, because that is a factor. They handed a strong baton over to the European session in terms of the Chinese markets. You had the likes of Nomura saying that maybe you've reached the bottom in terms of these regulatory challenges. Let's check in then on the markets. Across Europe, it's still positive. The mood music is upbeat on this Monday morning, up 0.6%. The futures in the US, of course, the cash trade is closed. Futures in the US are also up 0.2%. We wanted to focus on aluminium, of course. The price rises there, up more than 1%, so you're at decade highs. This is a result of the political turmoil in Guinea, which is a producer of bauxite, which goes into the production of aluminium. So that is another inflationary aspect to bear in mind as well. Crude, slightly lower by 0.9%. The Saudis cutting prices by about 50% to try and push in to those Asian markets. Fran.
Yeah, now we've also been hearing from finance and economy ministers from across the European Union as they weigh the risks posed by rising Eurozone inflation. Now, they spoke to Bloomberg from the Ambrosetti Forum over the weekend.
I don't think that it should come as any surprise that there is a spike in inflation right now this year.
We are not concerned by the current level of inflation in the EU or everywhere in the world.
Inflation is very much influenced by energy prices and food prices.
All the institutions consider that it will be a transitory feature, and we have to avoid that it becomes structural.
We think that this increase is a temporary one.
We are monitoring it, and we should monitor it very accurately, but without going to conclusions too soon.
We remain vigilant, but we are not concerned.
It is a natural feature of a very strong recovery that we're witnessing.
Well, European finance ministers are speaking about inflation at the Ambrosetti Forum in Italy. Well, joining us now is Kit Jukes. He's Chief FX Strategist at Societe Generale. Kit, good morning, first of all. Let's talk about the dollar, second of all. After that jobs number on Friday, what happens to dollar now?
I think we're in a period where it might be softer for a week or two, just because we're back to
We're back to a relatively risk-friendly environment. If people are going to be less pessimistic about China, it still looks as if the first Fed rate hike has been firmly kicked into, if not the long grass, the 2023 grass, which is too far away for me to think about it too hard. And the markets are willing to, at the moment, look through the Delta variant and say, yeah, look, this is a temporary phenomenon. Now we'll see where we go. The next leg up for the dollar, I think, in the long run, it comes really when we focus on the timing of the Fed rate hikes and really get back to looking at the front end of the U.S. curve. And I suspect the next worry about that comes from the belief in the market that a lot of these policymakers are a bit complacent about the inflation outlook in the next 6 months. I think we're going to get at least one scare on that front.
At least one scare on the inflation front. Kit, where is your, you talk about the importance, of course, of the taper, then the timeline. Where is your timeline now? How have you changed that for you on the back of the jobs numbers on Friday?
The jobs numbers, I think, just means that the idea that we get a taper announced at the September FOMC meeting is pretty remote. That means it gets announced at the beginning of November. That in turn means that it's really hard to have finished the taper until late in 2022, and then if there's a gap of any kind, we're into 2023 for the first rate hike. So I think there's a lot of movable parts in terms of how the economy reacts and how the markets react to tapering, but it's a long way out now. That's really what the jobs number did. It reinforced the Jay Powell message.
Kit, what's scarier in your eyes, deflation or inflation?
In my eyes now, inflation, just because of where we've got. It's interesting, we've had 20 years of being scared of deflation, if you like, since Alan Greenspan gave us 1% rates at the end of the Asian crisis, and we've had equity markets that have gone up such a long way since then. And I think inflation is scarier now because of the asset price inflation that we've had, that squeezing inflation out could be very painful. I was half thinking you wind the clock all the way back to 1971 and President Nixon, when he was really worried about jobs, not inflation, when he got rid of the gold standard, and got rid of the Bretton Woods system. I think now, I don't know whether there's complacency about the medium-term inflationary dangers, but inflation and having to hike rates and fight inflation, even in slowing economies, could be pretty painful because specifically of what we've done to asset prices and to debt levels over the course of the last 20 years.
Kit, what is your view then on commodity currencies? Is the bearishness that we've seen in some of the commodities FX overdone?
Yes, but it's likely to be persistent. But it's not just that they're commodity currencies that traded on the back of the Chinese issue. You've got a lot of individual political stories in places like Chile. You've obviously got somewhere like Australia where, in between rolling lockdowns and an exceptionally dovish central bank, the currency looks dirt cheap to me, and I can't think of any reason why it would get significantly stronger with the current arrangements in place. So I think the commodity currencies need, a decent following wind, kind of a defeat of the Delta variant, return to more positive global growth story. There's quite a sort of an army of things that need to fall in place to get them going higher. But let's be fair. This year's top currency is the South African rand. So there's money that wants to go and look for yield, wants to go for these growth stories if it gets unleashed. But it's still just messy more than easy to turn around and say, let's just go and buy them all.
Kit, I don't know. I don't know if you have big thoughts on the coup in Guinea or aluminium or bauxite, but does it actually point to supply chain constraints? It's incredible that a coup. I know they're a country that's very rich on bauxite. Leads to aluminium actually at a 10-year high. What do you do with these supply chain constraints? Are they bigger and actually more aggressive than expected? And so, do you worry about the world economy in 6-8 months?
I think we worry that they're pretty big, that they're a vulnerability for the global economy. They're pretty big in the short term. By and large, what happens is they spike up and we find a way around them. So you get a period where this causes short-term pain, but not more than that. The kind of the geopolitical dependence on some specific countries to provide us with a whole load of raw materials that we need, and specific countries that many of us can't find on a map and don't understand the domestic politics. is something that we're going to have to live with. But so far the pattern has been we find a go around, we find a solution after a scare.
Look, Francine talked about the growth prospects, the global growth prospects, and you're right, the complexities of issues like Guinea. When it comes to China, obviously a major component of that global growth, you're looking at a yuan that has been relatively stable despite all the regulatory changes we've seen, trading in a tight range for the last 3 months. Does that continue, do you think, for the Chinese currency?
Yeah, I mean, it's clearly, another reminder. I mean, A, the yuan is incredibly important. B, the yuan is not a free-floating currency. There's absolutely no way it would be here. And I think C, perhaps more important than anything else, the Chinese authorities have clearly decided that while they try this juggling act of containing some sectors of their economy while trying to get enough growth for others, which is a really difficult juggling act to get right, one of the things they don't need is the additional headache of a volatile currency. So, I think it can weaken more than it can strengthen because that's the balance of risk from here. But I don't think it's going to cause major ructions. It's in terms of something like the euro. If it would get significantly stronger, it would let the euro rally up above 120. I don't think that's going to happen.
Yeah.
But I don't think we're heading back to 7.
But it's exciting because it's ECB week. What are you expecting from the ECB on Thursday?
Noise, lots of noise, not lots of action, but lots of noise. Well, we've got hawks in town. There's a debate. There is a debate coming out of the ECB in terms of what to do about policy normalization. Maybe someone at the ECB will use the word tapering, which has never happened. But so there is a debate to be had. But in the great scheme of things, the ECB stuck at less than zero rates. And is going to be there for a very long time. And that bit, unfortunately, doesn't change.
Okay, we'll have to brace ourselves for that noise, hopefully cut through some of it when the ECB meets later this week. Kit, thank you, as ever, for your insights. Kit Jukes joining us there from SocGen. Okay, plenty more ahead. Stay with us. This is Bloomberg.
Welcome to El Zonte, known as Bitcoin Beach. This little surf town on the coast of El Salvador is one of the first to go full crypto. Yep, you heard that right. Everything from groceries to coffee to salaries and community projects can be paid for using Bitcoin.
It's actually been crazy how fast it has caught on and how useful Bitcoin's been for everyday people.
Just to buy something as simple as a cup of coffee can be done quickly, painlessly.
Somebody said, I want to be the next Reid Hoffman. What would you say is the best training ground to do that?
Well, I'm still young enough that I'm still hoping to be the next Reid Hoffman myself.
Right now, about half of U.S. households invest. We'd like to get that number up to 95+%. Investing should be as ubiquitous as shopping online. It should just be something that people do.
We were able to largely compensate for our customers the effects. And as I said some weeks ago, the second half is more difficult, and that is what we see now. It is more difficult. It's here to stay, the problem, for many months. but we are intensively working with our suppliers to compensate the effects for our customers.
We will remain in shortages for the next months or even years because semiconductors are in high demand, Internet of Things is growing, and the capacity ramp up will take time. So it will be probably a bottleneck for the next months and years to come.
The chief executives there of BMW and Volkswagen speaking about the chip shortage at the IAA Motor Show. Now, after almost 7 decades in Frankfurt, the International Motor Show has found a new home in Munich. Our co-anchor, Matt Miller, is in the Bavarian capital for us. Matt, a car show with visitors. I mean, this is a novelty after the pandemic. How much excitement is there on the ground?
It is pretty exciting, actually, and the auto show is pretty full of visitors. Obviously, it's mostly press and corporate guests today, but there are a lot of them here, and there really aren't very many cars here. In fact, a lot of car makers haven't even bothered to come. Lamborghini and Porsche aren't here. They're in Munich, but they're in different places. Ferrari, of course, isn't here because none of the Italians, Stellantis isn't here, Peugeot Citroën isn't here. So what we do see are a lot of companies like Way. I'm standing next to a Way stand, or you can see Bosch over there. So a lot more suppliers than you would typically see at a car show, really outweighing the actual car manufacturers. The Daimler stand is here. There is a Volkswagen stand as well as BMW, but they haven't brought so much product. It's more about mobility. It's about the batteries. It's about the future solutions that they're going to provide and the tech and software involved in that.
Yeah, that in-car entertainment seems to be in focus then with those suppliers on the ground there. Matt, what are you seeing from the Chinese car makers?
I haven't really seen anything from the Chinese car makers. Huh. Are there Chinese car makers here? I'm not really sure. My attention instantly goes to the bright and shiny new objects with a star or a propeller. I see BMWs, Mercedes, and I overlook the Great Wall or whatever the Chinese car makers are called. One thing I have seen, and I know that you know this, and many of our viewers will have figured it out as well, is a Swedish product that is owned by a Chinese car maker. So we were talking about Polestar. I think it is the most beautifully designed new car you can get right now, the Polestar 1. It's an offshoot of Volvo. It was a sub-brand, and now they're separating themselves a little bit more with an IPO soon. But of course, that's owned by Geely. So I guess that counts. Does that count as a Chinese car maker?
Yes. I'm going to say yes, an authoritative yes. So that's like exactly. I mean, we're talking about Polestar because we're looking for a surveillance early edition car. But you're telling me that it's less about the new cars, it's more about, green, it's more about batteries, and it's more about mobility, Matt.
Yeah, absolutely. I mean, everyone's trying to get as many batteries as they can. BMW said they're putting in $24 billion worth of orders for batteries. Everyone's trying to figure out where to send the chips they can source. So Herbert Diess, he's got to decide, do I give the chips that I have to the Volkswagen brand, or do I give more of them to Bentley, Lamborghini, Bugatti, and Porsche? He's got a lot of managers under him that are saying, give them to us. We need them. And the chip shortage isn't going to be over anytime soon. The CEO of BMW, Oliver Zipse, just told reporters, he says it's going to last at least another 6 to 12 months. So we're in for a long, bumpy ride in terms of the supply chain.
Matt Miller, now Italy is also looking to shield its supercar companies from the European Union's climate plans. Now, the EU, we understand, has a plan to phase out combustion engine vehicles by 2035, but Roberto Cingolani, Italy's Minister for Ecological Transmission, says he's in talks with the Commission about how these rules would impact brands like Bugatti, Ferrari, and Lamborghini. Well, he spoke to us exclusively at the Ambrosetti Forum.
Look, government is fully committed and supporting the idea that we have to phase out the combustion engine by the 2035, around that period. This is under discussion at the moment, and we are working on a very large market. In that gigantic market, there is a niche, which is the super high performance cars, and the Motor Valley is a clear example. There is, of course, at the moment a discussion ongoing with the Commission, but this is relatively marginal. I think the very important point is that those cars, they need very special technology, and they need batteries for the transition. So clearly, one important step is that Italy gets sort of autonomous in producing high performance batteries for automotive applications, and that's why we are now launching the Gigafactory program to install in Italy a very large-scale production facility for batteries. And for the rest, I have to say that the technology skill of the Motor Valley is so high that I have no doubt that these people can find their own way. The point that is, of course, having all the procurement line and all the components available, and not to be dependent on other countries, for instance, for the batteries.
So that was Roberto Cingolani, Italy's Minister for Ecological Transmission, speaking to us at the Ambrosetti Forum. So, Matt, if I understand correctly, some countries, including Italy, could go to the Commission and say, we understand the rules, we'll do it, your way, except for these like super brands where maybe we could have a little bit of an exception. I mean, if Italy starts doing it, Germany will start doing it, everyone else will follow.
No, I don't think so. Well, maybe. You may be correct. We could see many countries push for exemptions, but keep in mind that Ferrari and Lamborghini already get many exemptions because they make less than 10,000 cars a year. It's different with a company like Volkswagen, which produces and sells 12 million cars a year, right? It doesn't really make a huge difference if you allow Ferrari to keep making their beautiful naturally aspirated V12 engines. I'm going to blow your mind here very quickly, Francine, and tell you something that not a lot of people know. Bugatti is not an Italian car maker. It's actually a French car maker. It's based in Molsheim, which used to be Germany, even though, yes? Okay.
No, this is like Moncler.
Because Italy won't be fighting for Bugatti.
I know, Miller, but I know, it's like Moncler. The French say Moncler is Italian, but the Italians claim it because the founder was Italian. Like, I think we've had this conversation before. No matter how much you say it, the Italians will always, in their hearts, think that Bugatti's Italian. Erroneously, maybe.
Well, the French founder of Bugatti, Ettore Bugatti, was born in Italy, and he then put his car factory in what was at the time Germany, but is now France. There you go.
Okay, Matt Miller on the ground with some insights that only Matt Miller can give us on the auto market there. Thank you very much indeed from the Munich Auto Show, of course. Tomorrow, we have an exclusive interview with Lamborghini's CEO, Stefan Winkelmann. He's going to be speaking with Matt Miller. Do not miss it. And coming up, everything else to keep your eyes on this morning, from Boris Johnson's tough return to Parliament amid a fight over taxes, to what exactly is meant by common prosperity in Beijing. This is Bloomberg.
has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua in London with Tom McKenzie. Kayleigh Lyons is off today for Labor Day. Matt Mueller on the ground in Munich for the auto show. Now look at what else we're watching today. And I'm looking at the UK. I'm looking at what Boris Johnson's possible tax changes actually mean for everyone, from businesses to, of course, some of the people that live in this country. What's interesting is that the UK Parliament is returning this week, and he really is facing a backlash from a member of the Conservative parties. I made some of the reports that he's planning a manifesto-breaking tax hike on British workers, and that would be to boost funding for social care. So we look, Tom, to see whether this has any impact, of course, on pound, and then we have a pretty packed agenda for the rest of the week. What's on your radar today?
Yeah, so talking about taxes in the UK, that segues nicely to what's happening in China, where our team on the ground in Beijing have been interviewing someone called Li Shi, Professor Li Shi, who is a professor of economics at Zhejiang University. Now, the reason he's important is because he's an advisor, has been an advisor to the Chinese government on prosperity, on inequality, crucially, and how to close that gap. And he's been saying that taxes and the reform of the tax system in China, particularly property tax, could be key to that. But he says you only need to do that. You can only do that when the economy is booming. So not right now, when there's question marks about the health of the economy. Also saying that AI, digital economy, and asset inflation is a key reason why you've seen this blowout in terms of inequality. China, one of the most unequal countries in the world. And we're seeing the government trying to address some of those challenges now, with mixed results, of course, Francine. We can check in the markets as well in terms of how things are shaping up. It's been a broadly positive day, largely actually as a result of a handover. It's solidly in the green from China. The CSI 300 closing up around 2%. Hong Kong was positive, well, tech shares in the green. So you're seeing European shares up 0.5%. The futures over in the US, happy Labor Day, of course, gaining 0.2%. The cash trading is, of course, closed today for the Labor Day holiday, Francine.
Tom, I'm looking forward to the week. Actually, it's going to be a pretty busy week. So, you know, U.S. markets are shut for Labor Day, so people are off. And then it's this week that we could hear from Joe Biden, who he appoints, or if he keeps Jay Powell, or whether he appoints a new Fed chair. Then we have the Reserve Bank of Australia. We have China trade data. I love hearing you talk about China because you understand it more than anyone. And then El Salvador's Bitcoin law takes effect this week as well. So it's going to be a busy week. Tom, thank you so much for joining me this morning. Surveillance next.
What do you predict the Taliban will do in the coming months and years?
I would say consolidation of their power and gaining international legitimacy and recognition. This is the priority for the Taliban, not supporting transnational jihad, not basically in any activities outside of Afghanistan. If you really watch carefully what the Taliban have done in the past few days, they are engaged in a public relations offensive. They are trying to convince the world I mean, if you listen carefully to what they're saying, you think that the Taliban are newly born Democrats. They are peacemakers. And the reason why they want to consolidate their power, they want to convince the world that the Taliban have changed.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
There is wide disagreement on whether we've seen the worst of the Delta variant in terms of the upsurge in cases. Where do you fall on that?
So I see that the curve is continuing to go up, which is worrying. What is making me really nervous today is that there is this accompanying surge in deaths as well.
It's 11 a.m. here in London, 6 a.m. in New York, 6 p.m. in Hong Kong on this Monday, September 6th. I'm Francine Lacqua here in London, and welcome to Bloomberg Markets. So let's get straight to the markets. First of all, happy Labor Day to all of our U.S. viewers, near and far. A lot of people have a day off. Also, because if you look at cash treasuries, they're not trading today. U.S. markets are actually closed. Here in Europe, stocks rising with U.S. equity futures is investors betting that there's a slower hiring in the world's largest economy. Yes, the U.S. It could delay a tapering of the Federal Reserve stimulus, but I have to say on Friday, after that jobs report, markets were all over the place. Was the news so bad that actually it pointed to a really bad economic recovery? Is kind of the million-dollar question that we'll also try and answer today. And then aluminium, I don't know whether we have it. We should have it if it's not on your data board, hitting a decade high amid political unrest in Guinea. Now let's head over to the markets desk. Here's our Bloomberg, Emma Chandra. Emma, what do you have?
Thank you very much, Francine. Good morning. We are looking, of course, at a big day for European equities today. The Stock 600, the European benchmark, actually inching towards its record high. I wanted to bring up the GRR function, but we don't have it just here. But that's just to show you what's going on within the Stock 600 today. We're looking at green across the screen when you get to the various industry groups. Tech leading the way, a solid gain of some 1.3%. Real estate, really the laggard, but only 3 industry groups in the red for the Stock 600. And of course, we're seeing green. We're seeing gains across the European indices today. If we look a little bit cross asset, I also wanted to mention the dollar index gaining for the first time in 5 days today. Of course, you mentioned there that the rest of US trading, of course, closed for Labor Day, though we are seeing some movements in positive directions for the S&P 500 futures as well today. Also taking a look at Brent crude here, down, look, some 0.6%. Similar moves for WTI, and of course, we're seeing that because we're seeing Saudi Arabia slashing prices, of course, for Asian buyers. We also saw Bitcoin there rising to some 52,000. We also see El Salvador making it a legal tender tomorrow, and there's a bit of a social media movement at the moment to try and get people to buy Bitcoin. You were talking about aluminium. Look at that here. I've got a big, I think, 20-year chart for you here. It's hit a decade high, and this, of course, after that political unrest in the West African state of Guinea. We're looking at Oleg Deripaska, that's the owner of Russell, saying this is a really concerning thing for the markets. Of course, the concern is about supply of bauxite, that key, of course, to making aluminium. Francine.
Emma, thank you so much. Anna Chandra there with some of the moves that we should be watching on the markets. Now, look at what's ahead this week. First of all, President Biden likely making his choice this week on whether to renominate Fed Chair Jay Powell to a second term. Tomorrow, El Salvador becoming the first country to accept Bitcoin as legal tender. On Wednesday, Dallas Fed President Robert Kaplan holds a virtual town hall discussion. On Thursday, we get the latest ECB rate decision and press conference from Christine Lagarde. So actually, after a quiet day today, it's going to be a pretty packed week for the rest of the week. Tom Kinmoth, ABN AMRO fixed income strategist, joins us now. Tom, I have a million questions on the jobs report. All right, do you take it as a positive because there was wage pressure, so it's healthy because wages are going up, or does the number mean that actually the economy could be on its knees and we haven't realized yet?
Yeah, I think labour markets are absolutely key. Obviously, in the US, there it's still a little bit vulnerable. We still have the impact of Delta variant beginning to play a larger role. Within Europe, for example, short-term labour's force numbers are still very high. We've had a 3 million increase in the population who left the labour market. And for us, that's one of the key reasons, especially this Thursday, that the ECB will draw to as the reasons why they'll continue to be very dovish, continue to support economies going forward. We're basically positioning for a lot lower for longer scenario, especially in Europe.
Tom, so what does it mean actually for, does it change your view of when Fed starts tapering? And they've told us and told us and told us, tapering does not mean rate hikes.
No, I think that's the key. Overall, there's going to be a very dovish sentiment throughout the world at the moment. Countries really want to overheat, if possible, for a number of periods, and that will then begin to play through. Obviously, every bit of data that's not as strong will continue now to see the second round effects of Delta, which wasn't planned for before. So we're even dovish then on the Fed side that they don't want the markets to get ahead of themselves. They are probably pricing in too much already at the moment, and we're positioning for far lower for longer on that side. Even in the last 3 months, the market's beginning to adjust lower, and we continue to see these labour markets not coming through as strong as anticipated by the market.
Tom, what does it mean for treasuries then?
We think lower overall. The market is pricing in too much overall. We think the first rate hike could be in 2023. The ECB even later, especially in terms of this Thursday. ECB, we think, will remain with heavy stimulus still coming into the market. And obviously, we've got a huge problem here in Europe as well, that corporate financial conditions are still very, very fragile, begun to deteriorate even in some big countries, such as France. And looking at the longer term, though, debt serviceability of both countries everywhere will be really important. Interest rates have dropped so much, especially in Europe, that in Italy, we expect interest rate costs as a portion of GDP just to be 2%, which is very low.
But Tom, what does that mean? So first of all, what are you expecting from the ECB? And we saw this, note by some of the banks saying that if you look at policy divergence, or actually when you're looking at, for example, the conversions of Italian, bonds with German bonds, they'll just get narrower and narrower. I mean, does that make sense?
In the end, it's compression. So if we have more ECB stimulus coming into the market, we're going to have spreads very, very low across the board. We'll continue to see Italians performing. We expect Bund at minus 50 basis points around the deposit rate this year and next year. So that's well out of consensus. And then also we'll have that ability. So we've got the market compressed heavily, but also the chance of credit spikes is quite limited. Because all the countries are being helped at the same time, debt serviceability, as mentioned, is lower. So we essentially think the ECB is going to be here for a lot longer. We expect TLTRO extensions, and the market at the moment wishes for more inflation. But if you look at core inflation, it hasn't been going anywhere. Previously, after crisis, as it drops, we expect it to pull back into next year and us to be in this a lot lower scenario than it's priced in at the moment.
Tom, overall, what would a policy mistake look like? So do you worry more about deflation or rampant inflation?
Deflation on that side. There's still a lot of variables going. Before the crisis, especially in Europe, there was a lot more worries on that side. Central banks are so closely involved now with the markets and quarterly data and everything. The chances that they would accidentally raise too quick looks quite slim. As said, they will want 2 or 3 periods, 2 or 3 quarters of the market exceeding, for example, a 2% inflation rate, which would be excessive. So for us, we're still on that dovish side, still think more stimulus, and purely looking at core inflation, there is a lot more to do.
Tom, overall, I mean, a couple of questions, or maybe, one killer question when it comes to supply chains. Are we underestimating the longer-term impact some of these supply chain issues could be here to stay?
I think how the Delta variant now progresses in China in the next few months will be absolutely crucial. We've seen the UK obviously rebound very quickly in terms of restrictions. That looks very good on the supply and demand side. The question is, which way does it go? We're at a fork now in the next couple of months, as we saw last year. We'll begin to see a lot more pressure put on that side. Is there more restrictions? And at the moment, it looks okay. But if it begins that we have more restrictions, especially globally, then that would begin to weigh more on supply chains. So more temporary factors at the moment.
Right. But Tom, where do you see it first? So if this is temporary for the moment, if it gets ugly, how do you see it?
I suppose we begin to see it just coming through on disposable income goods, on large items, ticket items. Obviously, we've had a lot of discussion there on microchips and everything on that side. But when we begin to see huge import and export imbalances because of that, that's when it will really begin to hurt. Obviously, Europe, heavily export-driven GDP on that side. US, a bit less export-driven, but still really important on that side. And it's all tied to now how the next few months go. How can economies, how will they deal with Delta rising, especially in the Northern Hemisphere? What will occur on that side?
Okay, now there's, I love some of the research notes, Tom, that were kind of off the beaten track. I know you look at, vaccine supply bottlenecks clearing up. But again, is there anything that you're seeing in the economy that should make us worried about where fixed income goes from here?
Our base case now is for rates to stay very low at their current levels. Carry has become king, and within the fixed-in world, credit is king. That's the only area that's given a positive return. We're positive on high-yield credit. Obviously, there are some members that are very worried about the long end. With our very dovish view, we're positive with the long end, like to get the duration on that side. And so overall, the biggest worry, ironically, to credit and fixed income is an improvement in conditions. If we suddenly get excessive growth, excessive inflation, then the long end, say over 8 to 10 years, will underperform. And that's what's happened with the ECB being so heavily involved in markets that actually when we get good performance, it's bad.
What do you do with China right now? So again, one of our top read stories today on the Bloomberg terminal is trying to figure out what they mean with common prosperity and what happens in crackdown. There must be a fixed income angle to this. What are you looking at?
Essentially, is it going to offset the strong strength that we've seen in China? Is divergence or a greater tax system going to impact this huge growth and ability it's got in China? And the answer for us, I suppose, is no. That despite these smaller rules and changes, and we've seen it obviously on the domestic companies, the huge domestic user base is obviously helping excessively. And at the moment, we just don't foresee that a policy change there would be able to globally impact everything in the markets, especially in terms of where the central banks are going in terms of interest rate rises. China has managed the economy very closely, will continue to do so, and will make sure that the wheels do not fall off by any of their big changes.
Tom, thank you so much. Tom Kinmuth, their ABN AMRO fixed income strategist. Now let's get straight to the Munich Auto Show. Matt Miller joining us from there, where the International Motor Show has found a new home after almost 7 decades in Frankfurt. And Matt Miller, you are at a conference with real people talking about real things.
Yeah, a lot of real people here. Mostly they're talking about, can I get enough batteries? Can I get enough chips? But they're also talking about mobility solutions. They're talking about ride sharing, ride hailing, delivery services. This looks like it's going to be a hefty chunk of their revenue. So we could be looking at 15 to 20% of annual revenue going to mobility services for a company like Volkswagen, which is why it's spending so many billions of dollars. The CEO, Herbert Diess, told me today, $2.5 billion a year developing the software, making the acquisitions, and putting the pieces together for a bigger mobility services business. That jargon term that's going to make a lot more sense to us when we start using these services more often, Fran.
All right, Matt Miller, I'm looking forward to our conversation. Matt and I are having offline and online, also collegial disagreement on whether Bugatti could be considered Italian, so we'll get back to that. Matt Miller at the Munich Motor Show. Now, he'll join us a little bit later on. Coming up in the next hour, Alberto Gallo, Algebrie's partner and portfolio manager. He'll have a thing or two to say about China and, of course, the jobs report. That's at 7 a.m. in New York, 12 p.m. in London, and this is Bloomberg.
With the First Word News, I'm Angel Feliciano. The price of aluminum climbed to its highest in more than a decade following a military coup in Guinea. The West African nation is a major exporter of bauxite, the raw material used to make the metal. The head of Guinea's special forces says he took action to address financial mismanagement and corruption. Here in the UK, it's likely to be a tough week for British Prime Minister Boris Johnson in Parliament. Today, he'll be forced to defend his handling of the Afghanistan crisis. Plus, Johnson faces a backlash from his own Conservative Party over reports.
Good morning, traders.
I'm going to place an order to sell short euro. So if you want to sell short euro, if you want to follow my trades, the order is 118.637. So I'm placing an order to sell short at 118.637. Follow me, stay with me, and we will close this trade in profit. We'll see how long. I can't tell you, cannot guarantee you how long it will take. It might take a couple of minutes, it might take a couple of hours, but eventually we'll close the trade, and the most important things, we'll make a profit. Stay safe, guys. Okay, guys, short position opened on euro 118.63.7. Okay, guys, I'll speak to you later.
Lots happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
I support the new framework.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
The growth story in cannabis remains very strong, even after the sort of the loosening of the pandemic. There was a worry that there might be wallet spend competition, but so far the cannabis sector seems to be holding up very strong.
Welcome back to Bloomberg Markets. I'm Francine Lanka here in London. Now, aluminium, or aluminum if you're American, climbed to the highest in more than a decade. This as political unrest in Guinea fueled concerns over supply of the raw material, bauxite, needed to make the metal. Now, joining us now is Eddie van der Veld of Bloomberg Markets Live. Eddie, I have so many questions because, first of all,